peak moment, peak growth, peak fiscal. I still think we have a ways to go on the cyclical recovery here.
Our view is that the economy is likely to continue to be strong, but we are transitioning, right, from peak.
We not only have growth fears, but we have questions about what the world looks like once we get through this.
Starting to see some cooling global mobility trends, which means reopenings are pausing a bit.
Some of this will ultimately defer growth into 22, which is exactly what the equity market needs right now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The bounce continues from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, joined together today by the wonderful Taylor Riggs. Lisa back with us.
She was so
Monday.
dazzled with her space coverage. She
I'm
said,
sure
I have
she
to
was.
come on.
We can talk about that a little bit later this morning, Tom. Equity futures on the S&P up 19, advancing 0.4%. This equity bounce has legs this morning at least, Tom.
It does. The VIX under 19 speaks volumes, 18.71. The bulls line up. John, we spoke with Michael Purvis yesterday. I think others begin to recalibrate to take the earnings. Dana Telsey this morning takes Louis Vuitton out to new pricing, the French luxury conglomerate. But there's Benjamin Laidler, and I love what he says, John. It's a healthy pause. What we saw was not a correction.
Let's get to the Laidler quote, shall we, from eToro. He says the following, Tom. 5% falls are more common, averaging 3 a year. History favours buying them as the fundamental outlook is unchanged. That's the Ben Laidler view. Let's talk about this bond market. We went from 112 yesterday, Tom, to 125 this morning. And here's my question. On what? On what exactly did we deserve a range
I think
that wide?
a sigh of relief and maybe a little bit of more clarity on the Delta variant. We can talk about the vaccine later. We don't need to do it right now. But I would just say there was a little bit of pandemic calm in the last 12 to 24 hours.
So, Taylor, let's talk about the Delta variant and the forward look from United Airlines, because that did not sound like an airline that was too concerned about the future.
Nope, not at all. Unbelievable. Looking at a profit now in the third and the fourth quarter of this year, a full recovery of demand by 2023, which frankly, if you've been traveling, you would actually think that there was a full recovery of demand this weekend as everyone continues to get on those airplanes. But John, look, we're in the middle of earnings season, right? So we're hearing from companies like United. We'll get some others later, really talking about this Delta variant. I hate to say it, doesn't seem to be impacting at least the bottom line for now.
We'll return to that story in just a moment, Taylor. Let's whip through the price action quickly. On the equity market, your equity market looks like this on the S&P 500, advancing 17 or 18 points, up 0.4%. Outside of that, into the bond market, yields are higher by 2 basis points. This range has been unreal. We'll talk about it through this morning. 112 at the lows yesterday, 125 a little bit early this morning, 124.67 right now. Outside of that, the 2-day meeting at the ECB beginning right now. Taylor Riggs, that concludes tomorrow. Euro dollar just a little bit weaker going into it. South of 118 at 117.75.
Well, and let's talk about those yields, John, because you mentioned the 10-year. We're also taking a look at a 20-year bond auction as well. These are bond auctions that we've been really following closely. You're going to get a 20-year for about $24 billion. How much concession do you get or not, given you're up 9 basis points in 2 days? It is a rate of change kind of day. We do that for our next guest. We change the board and take a look at our next morning brief. This isn't a bad word, but it is called the B word event. Do you know what that means?
No idea.
The Bitcoin event. It's going to be Elon Musk, Cathie Wood, Jack Dorsey, all at this event, hyping up crypto that manages to hold on to that $30,000 level for Bitcoin. And then, of course, John, it always comes back to fundamentals. We heard from Netflix. We've heard from United Airlines. It's going to be Texas Instruments after the bell. Analysts really liking the chip sector, how much of the optimism can carry through in the second quarter.
And just quickly, Taylor, before we get to that, just what's the sum up of what happened with Netflix after the close yesterday?
Third quarter guidance looks a little bit light. It was Rich Greenfield of Lightshed Partners really nailing it on the top 10 questions he wanted to ask analysts. Amazon's buying MGM. Why is Netflix not making a bid to speed up this process faster?
Interesting. Are we catching up with Team Moffett-Nathanson a little bit later this morning, Tom?
Yeah, I think
that'll be fun.
Michael Nathanson on content, which I believe is king. Ted Lasso Friday.
You're so excited about Ted Lasso, aren't you?
I am.
This Friday. That's Apple TV.
I think Grealish looks
Just
good
to be
with
clear,
Richmond.
that's Apple TV, right?
Apple TV. Yes,
Looking
I
forward to
believe
that.
it is.
Okay, I
Yes.
promise I'll watch the first episode of season 1 for you this
John,
weekend.
John, about a third of it. It's like Little Britain years ago. Like a
remember
third of
that.
it, I just don't get.
I love that you watched that.
I'm on Virgin Air, and I'm not on Galactic. I'm on Virgin Air. The guy next to me is laughing hysterically.
Yeah.
And so I look over. I'm like literally looking over the edge. John, this is the one time I flew in business class. And
Of course,
there
yeah.
I am, and it's Little Britain. So I started watching. I watched every episode. Lasso's, Ted, John, I need you to translate it for me.
I will do that over the weekend. You give me a call as you're watching it, all right?
Okay.
Okay, let's bring in Eric Friedman, US Bank Asset Management Chief Investment Officer. Eric, let's start right here and not with Ted Lasso. I'll save you, don't worry. You've asked the important question. Is this just a little correction, or is this a transition into something bigger? Which one is it?
Jonathan, we think it is just a pause as opposed to a phased transition. Really, two reasons behind that. Number one is we think there's this push-pull between what we're calling Horizon 1 and Horizon 2. Horizon 1 is the reopening investment horizon, the gradual mobility increases, more flights and more mobility across cities. Horizon 2 is what happens once we're already there, once that reopening occurred. And so we do think that the fits and starts that we're seeing in Horizon 1 will have corrections like this. And we also think that probably a little nuance here is the bond market is likely already pricing in Horizon 2. The terminal value of Fed funds likely lower, as well as general productivity and demographics weaker. So we think this push-pull will continue, but we're still bullish. We're still sticking with that growth mentality.
Eric, you write an extremely sober adult note. We don't see enough of those. It's from a button-down banker with belt and suspenders. I get it. When there's a phased transition, how do you know when to make that transition to a different portfolio allocation?
Tom, the biggest thing that we're focused on are really three variables. Number one is the dollar, and what we're looking at the dollar is a rise above 94, 94.5 the DXY, or 112 in the trade-weighted dollar index. Number two would be the 10-year. We think a test of, let's call it 110 down to 1%. That would signify that the bond market is pricing a really worse Horizon 2 by our parlance. And I think the final is going to be our viewpoint on earnings. As mentioned earlier, and Taylor does a great job of this, talking about rate of change. We are in a very delicate position right now in terms of both revenue forecasts as well as earnings forecasts. If we see some deterioration there as we get deeper into this reporting season, that would signify to us that we need to come off that growth mindset, that pro-risk mindset, into more of a neutral positioning. That's where our bias is right now.
Eric, you have bond guys like Jeff Gundlach of DoubleLine saying that stocks are attractive on a relative basis because a 125 on the 10-year doesn't make sense. How are you thinking about relative value?
Yeah, it's a great question, Taylor. Basically, two things we're looking at. Number one is if you look at the risk premium, which is a wonkish term, it basically shows the difference between the dividend yield of global equities versus 10-year or even global rates. It's really attractive. Stocks look very attractive versus fixed income. Versus their own history, stocks are certainly in the top quartile of expensive. So we think fair value for the 10-year, Taylor, is likely around 160, 161. Doesn't mean we have to get there immediately, but our viewpoint is a gradual retracing, if you will, upward in bond yields suggests that stocks probably add a little more value here, but you have to look at them on both an absolute basis from a relative value standpoint, on a risk premium basis, as well as versus their own history. So relative value certainly favors equities over fixed income here.
Eric, what on earth is fair value in a bond market with a huge monster-sized insensitive buyer, price-insensitive buyer? What's fair value in the Treasury market these days? How do we even come up with that?
There almost are three waves of buyers, Jonathan. You have general speculations of people making bets on where 10 years go. You have hedgers in terms of mortgage, as well as pension buyers, and you have, I'd say, just a steady drumbeat of Fed participation. So tough to have an edge on speculators. But if you look at what's happening in the mortgage market, if you look at what's happening with respect to pension funds, those liabilities are getting more expensive. So that's almost like that short gamma position continues to grow. That means people are stepping back into the bond market. So again, we think that positioning gets cleaned up and a gradual retracement up to that 160 level is more likely. But again, it will happen on a very phased, very gradual basis.
Eric, we've got to leave it there. It's good to catch up, sir. What a couple of days. What a start to this week we've had. Only halfway through it. It's only Wednesday, I'm told. Unbelievable. Eric Friedman, US Bank Asset Management Chief Investment Officer. Bit of news I want to bring to you, Tom, you might be interested in. The former OECD Chief Economist, the former Citi Chief Economist, Catherine Mann, endorsed by the Treasury Committee for the post on the Bank of England. So, Tom, that position has been confirmed.
Yeah, this is a huge deal for Prime Minister Johnson. This brings to him the authoritative trade voice on trade deficit and trade surplus. She's absolutely definitive. Catherine Mann out of the Massachusetts Institute of Technology. Her book, John, 20, 30 years ago, Is a Trade Deficit Sustainable? Was a required read. To be honest, John, it's how I met Larry Kudlow. We were both reading the book.
That's how it happened.
At the same time. Yeah, seriously. And
that's not how I met Larry.
This is that was at a bar. This is an inspired choice by the United Kingdom.
On central bank appointments, Tom, let's talk about the Federal Reserve.
Yeah,
the Wall Street Journal pushing the story forward just a little bit with the following headline. Chairman Powell enjoys the support for reappointment, but he's not a log. I'll bring you the quote. Quote, Biden's selection of the next Federal Reserve chair is likely to be a choice between keeping the current chief, who enjoys broad support in markets and among lawmakers from both parties, or replacing him with one of his well-regarded colleagues, cough, cough, Governor Brainerd, maybe. Governor Brainerd mentioned in that article as well, Tom, citing White House officials and Democrats alike. Just a little bit of a push forward on that story from the Wall Street Journal this morning.
Well-written calendar item. It's the third, fourth week of July, and that's what you see, John. There'll be more of these, and it really heats up not so much after Labor Day. I'd almost go into October.
Chairman Powell, the term ends in February. Taylor Riggs, what's the take of you looking forward from here on the Federal Reserve?
I'm always, interested to see what they say about the taper, John. There's been a lot of commentary given the housing market if they start to taper back some of the mortgages first, if they do an equal weight because you have a 2013 sort of notice the way they were tapering equal weights treasuries, mortgages. So when we think about a tapering Federal Reserve, that comes to mind.
July 28th, the next meeting. That's coming up next week. That is
really,
just a week away.
That.
There you go. You'll be staying late, Tom. Yeah. Coming up in the next hour, Drew Mattis, MetLife Investment Management Chief Market Strategist from New York. Futures up 16 on the S&P, advancing 0.4 of 1%.
Rocketing into
we're not doing that this morning, Tom. That was yesterday.
This market's on liquid oxygen.
Oh, is that where you're going with
hydrogen.
It? Okay. Carry on in the break. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. Senate Majority Leader Chuck Schumer is on track to fail in his attempt to start debate on an unfinished bipartisan infrastructure bill today. Republicans say there is no way a deal will be reached in time, and they won't vote to open debate until there is text spelling out the agreement. Key Donald Trump ally Tom Barrack remains in jail in Los Angeles after being arrested on illegal lobbying charges. The founder of Colony Capital and two others are accused of unlawful efforts to advance the interests of the United Arab Emirates in the U.S. He is also accused with obstruction of justice and making false statements to federal agents. Barrack's lawyer says he is not guilty. Now, widespread flooding in central China has forced about 100,000 people to evacuate from a city known as the world's biggest producer for iPhones. The city of Changzhou has received 18 inches of rain from Monday afternoon through to Tuesday. That was equivalent to about 8 months of the city's average annual rainfall. The Milwaukee Bucks have won their first National Basketball Association title in 50 years. Giannis Antetokounmpo scored 50 points to lead the Bucks to a 105-98 win over the Phoenix Suns in Game 6. That gave Milwaukee a 4-2 win in the best-of-7 series. Antetokounmpo was named the most valuable player. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
We've seen some challenges, and certainly that's played out in prices, but we think that those are going to be temporary. We think that those are really connected to coming back from this historic pandemic. But, I think that the main thing here is that we're in way better shape than we were a few months ago.
Let's hope that continues to be the direction of travel here. That was Heather Boushey, the U.S. Council of Economic Advisors from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with the wonderful Taylor Riggs. Here's the price action this Wednesday.
Okay.
Keep saying that. It is only Wednesday, 43.31.
You're right, John. It feels like Friday.
Your futures contract
we're
right
exhausted
now, Tom,
from our space
up
flight.
16 points, advancing 0.4%. Outside of that, into the bond market, 124.67. Yields are higher by a couple of basis points, 2 or 3 from 112 at the lows yesterday. What a turnaround. And into the FX market, euro dollar 117 and all the sevens, Tom, going into the ECB tomorrow.
Oh, it's going to be interesting. Heather Boushey there with the Council of Economic Advisors, the economist from Hampshire College and the New School. And John, I beg to disagree with Heather Boushey. She's just flat out wrong. Things aren't better. And it is destroyed this morning, all the happy talk, by Dan Keating and Leslie Shapiro in the Washington Post. They have a definitive must-read on the unvaccinated. Anne-Marie Horton is in Washington and considers the unvaccinated and our politicians. Anne-Marie, what are the politicians going to do?
They're imploring, Tom, their constituents, many of them, to go out and get the vaccine. We heard from Senator Mitch McConnell yesterday of Kentucky, who, you know, he had polio and he was able to survive that as a child. And he said he could never imagine a time where there would be a disease spreading, a virus spreading, and that you'd have the science, but you just couldn't get people to go out and get vaccinated. So you are seeing a lot of politicians that are going out. You have some that were skeptical that are now saying they are going to get the vaccine, but it's about nudging those that have been unwilling. How do you convince them? You have Charles Lane in the Washington Post this morning on an op-ed saying, is it time to incentivize, Lem? Can you give more money? How do you get people to go out and get vaccines? Or do you make it legal? You cannot come to school. You cannot come to this store. You cannot go to work if you don't have a vaccine. That's the question.
I'm thrilled you bring up Charles Lane because he's an academic of the conservative ilk where he has a real voice. The other academic of the conservative ilk is the former president of the United States, Donald Trump. What do the Republicans you speak to want the former president to do about his unvaccinated?
Well, I haven't heard exactly what they'd want the president to do, but many, I think, would say that they would say the president should use his bully pulpit in the sense that he goes out and does all these rallies and to convince people to get vaccinated. The president has gotten vaccinated. He threw a ton of money, his administration, at warp speed, and some Republicans say they should be using that to try to convince people. But the president of the United States has not, and many Republicans would say that until this administration gives a little bit of a nod to the Trump administration for the work they did on the vaccines, that President Trump would not want to come out and implore people to go out and get their shots.
John, from Keating and Shapiro, Nevada hospitalizations are back to January 29. Missouri, worst case, back to January 21.
Tom, the numbers aren't good, and I agree with you. They should be better. But I don't want to fall into the trap of lazy narratives. This is not just about Trump voters in the south of this country. I'm stunned to read the following line out of the New York Times, that around 60% of the workers in the city's public health hospital system are vaccinated. Anne-Marie, that's New York. 40% of the people that work there still aren't vaccinated. I'm stunned by that. Isn't that the thing we should be looking at right now, just beyond the lazy narrative of one single group of individuals?
Yeah, and New York right now is going to require testing or mandatory vaccinations for those healthcare workers. There are these also margins, you say, John, in these areas that have high vaccination rates of people that are still unwilling. The concern, they're less of concern, I should say, because you're not seeing the spread as widely in these places because there is a large majority that have so quote unquote herd immunity. The other thing we should mention is that there was a breakthrough case in Congress, an aide close to Speaker Pelosi, did not get that close to her, though, where it was a worrisome, and also at the White House. And Press Secretary Psaki said the one thing that does reassure them is the fact that these cases, if you do get the Delta variant that is a breakthrough case and you are vaccinated, you are likely not going to go to the hospital. It is much more easier to deal with. So that is at least one optimistic thing to think about when you are considering this Delta variant, which the CDC says is now 83%. At the early July, we just hit the 50% threshold. So it is something to worry about. If you're vaccinated, it's a little bit less of a concern to your health.
Anne-Marie, I'd love to pivot to infrastructure. I've been hearing about infrastructure for, let's say, a decade or two. What is the path to a $579 billion infrastructure plan?
Every week is infrastructure week. Today, there'll be a crucial vote, but it's procedural vote. And what we're hearing right now is at the moment, they just don't have the votes to get it over the line from the Republicans. The Republicans have been saying that unless we see this legislation in hard copy, we're not going to vote to at least get it to the floor to the debate. Senator Schumer, who is really pushing for this aggressive timetable, is saying there's been times in the past where we've got legislation to the floor to debate, even though we didn't have it in hard copy. So he wants it to go ahead. But a lot of Republicans are saying by the end of the week, the early next week, they'd be more comfortable. So really, you have to wait and see. But that vote will be critical today.
Anne-Marie, just quickly, the push forward from the Wall Street Journal on Chairman Powell. What's the latest down in D.C.?
I spoke last week with Jared Bernstein of the White House Economic Council alongside Lisa, and he, even though you pushed him a few times, he would not budge on where they are standing right now. What the Wall Street Journal is saying is that there is bipartisan support, really, and we heard that yesterday at Powell's testimony, many Republicans coming out and saying, we like what you've done. But it's the progressive left that would like the president to take a different approach when thinking about how the Fed governorship is made up of, especially the Fed chair, and the fact that they want it to look more diverse. And that's going to be the position the president is in when he has to make this decision.
Anne-Marie Jourdan, a Washington correspondent down in Washington. Anne-Marie, good to catch up. Governor Brainerd, Tom, has been waiting in the wings for quite a while to get that top post.
Well, part of it's a top post, and part of it may be vice chairman a la Richard Clarida, but over on the regulation side, looking at Mr. Quarles' position right now, I don't spend too much time in this, John. Obviously, the chairman's a huge selection. It's just very political. There's an extent to it of checking boxes. One thing the economics racket looks at is this idea of putting in people who are not PhD acclaimed monetary theorists.
Do you have a view on that?
I don't know if I have a view on that. I think that Richard Clarida certainly fills that box, and I'm sure he's of great value and advice to the chairman.
That's why I think the vice chair spot might be a little bit overlooked here, Tom. That might be where the administration thinks it can make the greatest change here in the vice chair spot. But for market participants, for people who actually follow the Fed, Mr. Clarida over at the vice chair spot, Tom, has really led the transformation. This framework shift over at the Federal Reserve.
And the process of it and the articulation. This is Clarida of Gertler and Clarida in the middle 90s, former dean of Columbia Economics, and with major Wall Street cred as well, certainly his service to PIMCO. Are there going to be more like that as time goes on?
Should we turn to this equity market? Futures up 18.
It's a rocket.
We advanced 4/10
higher.
of 1%. You're not letting that go, are you?
No, I can't.
What did you make of Jeff Bezos after the rocket launched, Tom? When he thanked Amazon employees and customers because we made this happen.
Yeah, you know.
I'm not sure you want to say that out loud.
I would have gone with the Ron Howard baseball caps, not the.
You didn't like the cowboy hats. You didn't like that.
I like doing the space launch with a guy with a British accent.
That worked, didn't it? From New York, this is Bloomberg. Live from New York City for our audience worldwide. Here's the price action this Wednesday morning. Good morning. We advanced on the S&P by 18, advancing 0.4 of 1%. On the Nasdaq, just about up 1/10. And the rebound on the small caps, the Russell, continues up almost 1 full percentage point. That's the equity market. The Ben Lader take is interesting over at eToro, looking at an average of 3-5% corrections on any given year. And his take is that history favors buying them, and he thinks this is one of those occasions, except we didn't even get a 5% drawdown, did we, on the S&P? Switch up the board and get away from the equity market for a moment. Didn't get a big move in the equity market at the index level, but we got a massive move in the bond market. Even in the last 24 hours, we've gone from down at 112 on a 10-year up to 125 in 24 hours. Low of the day yesterday, 112. High of the session so far has a 125 handle. Right now, 124.17. Yields up again by a couple of basis points on 10s, on 30s, about 191. I want to look at the spread between 2s, 10s as well. Just to get a setup for our next guest, we've got a fantastic guest coming up. The yield curve, Tom, 103.80 this morning. That yield curve yesterday was in the low 90s, so a big turnaround there too. This one is hard to get your head around, just more recently, but the trend is pretty clear. We topped out at the end of March, Tom, and we've been grinding tighter, flatter ever since.
Yeah, and by no means have we broken that. I would say, John, we've just gone from the precipice of gloom sort of back to within the range. I guess is how I'd put it.
Is it the pendulum of
No,
gloom? Are we doing that
we were on
in
the
Lisa's
pendulum
absence?
of precipice, and there we were yesterday, and it was played down a little bit because we were doing the space launch. But I think I agree, John. We're just sort of back to where we were. We haven't really broken in any way. John, I do want to point out Johnson & Johnson earnings. It's a beta forecast, et cetera, et cetera. But John, in the middle of it, they have the class to break out their COVID vaccine revenues, and for a given July, they were up 10%, but with the vaccine sales, they are up 13%. Just, I think, a factoid there.
I figured you'd like the breakout of those
their
kind of things.
vaccine.
You're the only guy I know that gives a commentary on the delivery of the earnings themselves, the presentation, and not the numbers.
Well, yeah, it's important. What's important there, John, is not the ones that are good, but there's just so many where it's in Greek.
Well, why don't you tell me? Why don't you tell us all? Who gets it wrong, Tom? Just in the presentation.
Well, I'd have to see it. I mean, right now I don't see it. I think J&J's got some real clarity here, but when you see it, you see it.
Well, I know one of the banks you don't like.
One of the banks I don't like.
Going to tell us about it?
Well, yeah, we'll leave it.
Another time. All right, carry on.
Amazon, they rocket to clarity and transparency on their earnings. Right now on the economics of the moment, Francis Donald joins us, and this is a really needed moment given the turmoil in the markets. What's it actually mean down to GDP estimates? Francis, what have you done with your United States GDP guesstimates forward?
Well, not much, because we had already factored in peak growth and a somewhat material deceleration in the second half of the year. But this Delta variant is changing the way that we have to construct forecasts. It has to mean we embed more uncertainty. I don't know what politicians globally are going to do with reopening. We probably have to factor in more supply chain disruptions, which creates all sorts of havoc. And it means that our reopenings globally, also potentially in the US, might be a little bit slower. And while on one hand, I love that because I really do fear boom bust type scenarios, I prefer more gradual recovery. A little part of me gets concerned if this Delta variant does mean that we can't reach escape velocity. Maybe some of these really big ideas like game-changing MMT, productivity booms to the moon, cyclical super cycle changes, maybe we need to dial that back a bit. I think the bond market's caught on to this too, of course.
We didn't go to the moon yesterday, Francis. It was just suborbital. I look, Francis, at where we are, and what's really necessary here is the opaqueness of our guesstimates of third quarter and fourth quarter. They've deteriorated, right?
Yes, but here's the challenge for us is that any type of regime indicator that you look at, so we can look at, four quadrant growth versus inflation indicators. There are business cycle indicators. Almost everything has told us here that we're in a regime shift. We're going to now see growth decelerate and inflation decelerate. But those who are bulls will continue to point out that we're still at very high levels of both. So what do you do with that? And I think this market is telling us that second derivatives still rule. And no matter what your level GDP forecast is, here's a really hard thing to come to admit as an economist. It doesn't matter to market what your level GDP is. It matters what the fluctuations to it are over time. We're looking at deceleration in housing, autos, large furniture. Pent down demand in goods is going to weigh on this. And then we have to look forward into 2022, which is where my GDP forecast does get a little bit more concerning. We have a huge pullback in fiscal. I really hope we see the handoff to private sector. But these are some of the changes that are impacting the way we have to look at this forecasting. And ultimately, it just comes back to the same story. Regime shift, peak macro. Bonds know this. I think equities under the surface know this as well.
Okay, two questions. You've got to wear both hats now. Let's start with the economist hat in your seat. What's the GDP call next year? Just be clear on that. What are you looking for?
Somehow, John, I think I lost your question. I didn't quite hear anything.
That's okay, Francis. I can repeat it. Just first question, just quickly. What is the GDP call for you and the team next year? I think we might have lost her line, Tom. I think we're going to try and re-establish that. Francis Donald.
She's got the same line as Tim Stenovic yesterday, and Van Horn.
You really are reminiscent about that.
I teared up. I mean, it was great. John, I thought you killed it. I thought you were like way prepared. You sounded like Walter Cronkite there.
That means a lot to me. Just one go at it, and you're calling me Walter Cronkite.
You're like, it was
I
really
feel like this is disingenuous, or you just had a great night last night with Miller. I think maybe you had a great night last night with Matt Miller.
Well, we
You're
did.
feeling good and kind this
Matt's
morning.
in from Berlin, and I was ordered to,
I don't think this kindness lasts. I understand we've re-established that connection with Francis Donald of Manulife.
Saving us as usual.
Let's have another go. Yeah. Francis, are you there? Have we got you? Have we re-established
I'm
things?
Here.
Come in,
We have
tranquility base.
re-established connection. Thank you for
Wonderful.
dialing back into me.
Well, thank you for being with us. I just want to have a two-part effort with you. Part one, GDP call for next year, Francis. What is it?
Oh, I don't even forecast 2022 GDP at this point because the range of outcomes is so incredibly large. What we need to be forecasting is that 10-year yield, the shape of the curve, and what that infrastructure package is going to look like. This is the key when you are a buy-side financial economist, is how will the deviations change? And my view here is that we've already seen the peak in yields. We're going to see fiscal disappointment. And the biggest challenge of all is what's going to happen to Chinese policy next. That we hit peak macro is not a surprise. Anyone who can do year-over-year, quarter-over-quarter comps knew this was going to happen. What was a surprise was how tight Chinese policy was, how quickly the big pie in the sky fiscal game changer changed, and this Delta variant, which creates this uncertainty band around all of it. So that is the game when you're using the economic lens on the buy side, is not to come up with a point figure estimate. That is a fool's errand at this point. It's to get a sense of what those major drivers are going to be, where the inflection points are going to be, and the concern I have now is that we hit peak macro. We did a good job of highlighting that. Now, is that deceleration going to be sharper than we expected? I think yes. So anyone who does have to put together point forecasts for GDP is probably going to have to start marking them down pretty darn quick. That's an uncomfortable development if you're a forecaster.
You just made a monster call, though, and you did that with me a number of weeks ago, and I want to sit on that just for a moment. You think we've seen a peak for the cycle on a 10-year Treasury yield that was at 174 on a closing basis at the end of March, and right now we're at 124. What's your message to the happy talk about a return to 2%, Francis?
Well, there actually is happy talk here, which is that if you're a long-term investor like we are, then you actually saw a bond market that took out 2 rate hikes from the terminal end here, which means you can actually be a little bit more bullish equities in the long-term perspective. So that's my optimistic spin on this. I actually think this is good news if you're trying to develop a balanced return profile for yourself over a long period of time. The problem here is that we have not been in a game-changing super cycle. We did not see, and this is, I think, is a much bigger story than a lot of people have paid attention to in this bond market. Fiscal is disappointing us continuously. We have seen tighter policy from China. I'm not sure that we're going to reach escape velocity in these economies. If we had done that, if we were going to see productivity booms to the moon, if we had seen sizable fiscal across the world, then I'd be very happy saying, no, we're going back to 2% and above. But we didn't see the game-changing macro we hoped to see in the middle of COVID. That just has not materialized yet, and I don't think it does.
Does peak growth and peak yields mean peak margins?
It might. And Taylor, this is a great question because one of the things I try to push is let's move away from the concept of yay, reflation. Reflation is when growth and inflation are accelerating and it's good news. Now we're moving into price pressures and isolated areas of very high costs. And this is why pricing pressures are going to be a key component. Price capacity is going to be a component. And this is why I think, yes, listen to your macro analysts, but find best-in-class stock pickers and credit pickers who will know how to navigate this. When people ask me about why Delta is important, it's not necessarily the biggest reason is not because I care as much about the reopening. It is a huge problem for supply chain disruptions. And if supply chain disruptions persist, CPI will still fall, but you're going to have pockets of great discomfort. You're going to see stagflation, and you're going to see demand destruction. We've already seen this in housing and cars. Demand destruction from high prices is happening right now. So that needs to be seen more from the growth perspective than I think the broad inflation, broad reflation perspective.
Francis, thank you. It's good to catch up, and our apologies for that
Really
technical
good.
connection. That disruption a little bit earlier. Francis Donald there, Manulife Investment Management, Global Chief Economist and Head of Macroeconomic Strategy with one heck of a call, Tom, that we've seen this peak at a 10-year yield. We heard that from Robert Tippett PGIM. We heard that from Steve Major at HSBC as well.
These are nuanced calls. You know, John, I can really say into the Q3 mystery and Q4 mystery, these are really, really nuanced calls. You have to really listen carefully to the dynamic and the why they're making those calls. John, of course, I'm not on my game today. I have a surveillance correction to do. It's great, John, to see someone listening near Cape Canaveral. Al from Mosquito Lagoon emails in down in Florida.
Right.
And he makes clear that I was a folks pot with Emery Horton. I said Charles Lane was a conservative, and it was a brain freeze. I'm sorry. I would put the acclaimed Charles Lane as more of a center tendency.
A moderate, so to speak.
Thank you for watching in Mosquito Lagoon.
Thank you, Tom Keene, for the correction. Taylor Riggs, thank you for the wonderful question. You're right. Margins.
How come
Taylor,
I
we're going to
never have
cover that.
wonderful questions? Only Riggs has one.
Taylor's a little bit more thoughtful and listens to the guest.
Really?
Yes.
Oh, thank you.
You just listen to the guest, Tom. It's
Can I get
remarkable what
Tang on the
happens
break?
when
I
you
need
do
more
that.
Tang,
We're up 16 on the S&P. We advance a third of 1%.
No champagne. Just
from New York. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. The coronavirus has taken a dramatic toll on U.S. life expectancy. It dropped the most in more than 7 decades last year due to hundreds of thousands of early deaths. The pandemic's disproportionate toll on communities of color widened the existing gaps in life expectancy between white and black Americans. This is all according to the CDC. The US and Germany are close to a deal on the controversial Nord Stream 2 gas pipeline. The draft agreement calls for sanctions and other measures if Russia tries to use energy as a weapon against Ukraine. Chancellor Angela Merkel had previously balked at making independent moves against the Kremlin over the pipeline that will run from Russia to Germany. The wave of defections has resumed at Credit Suisse in the wake of the scandals involving Archegos Capital and Greensill Capital. 4 more senior bankers have left the Swiss bank. So far, more than 30 bankers have left Credit Suisse since the collapse of the 2 firms that cost it more than $5 billion. And Jamie Dimon is 65 years old, but it does not look like retirement is in the picture for the JP Morgan CEO. The billionaire was granted a special gift to persuade him to lead the biggest US bank for, quote, a big significant number of years. Diamond was awarded 1.5 million stock appreciation rights, which will let him capture a profit if the stock price does rise. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Live from New York City for our audience worldwide, alongside Tom Keene, I'm Jonathan Ferro, together with Taylor Riggs. Lisa back with us on Monday. Here's the price action this Wednesday. Your equity market shaping up as follows on the S&P, advancing 15 points, up about a third of 1%, positive 0.36 percentage points. Outside of that, yields higher by a couple of basis points, down from 112 at the lows yesterday to 124 this morning, 124.33, and 25 hours out from an ECB decision and news conference with President Lagarde. Euro dollar 117.72, negative there 0.08%, Tom.
It's going to be interesting to see, John, on the ECB. What's your initial thoughts?
Euro dollar, have we seen the highs already at 123? And were those highs at the start of this year? Have we seen peak euro strength? Kit Jukes of SocGen out this morning, Tom, suggesting maybe we have. Maybe that euro strength is behind us and not in front of us.
Yeah.
They were looking for 125 to 130. You don't hear much about that anymore.
You don't. And again, as you were talking with Jordan Rochester, you frame out how do you go down through 115 as well. Right now in the pandemic, it has been a joy to speak to Bakhtian Saadi with Johns Hopkins, our expertise in emergency medicine. I want to go there today, Bakhti, instead of the geography that you are expert at. In emergency rooms at the Johns Hopkins Hospital, there's got to be a certain percentage of people working there who are unvaccinated. There's got to be a certain percentage of people coming into the emergency room unvaccinated. What do you do?
So regarding employees of Johns Hopkins Hospital, we are vaccinated. We all do show our vaccine status that is now documented and recorded. Regarding unvaccinated patients, we have that knowledge on who's vaccinated and who's not. My practice is to gown up and be ready if I'm unsure of their vaccine status or their COVID status.
Doctor, I was very surprised to read the following stat in the New York Times that around 60% of workers in the city's public hospital system are vaccinated. Given what's happened in the last year, I would have expected that number to be far, far higher. Where is that resistance coming from, Doctor?
So we feel like a lot of that resistance is coming from ancillary services. There are still individuals who, despite working in public health hospitals, have misconceptions or concerns around the medical systems, have vaccine hesitancy, have victims of misinformation. And so it is really difficult to prove a counterfactual, and that is something we're still struggling with in all sectors of society, not just public health hospitals.
Doctor, many people are characterising this as a political party issue. Do you think that's helpful?
It is not. This is not a political party issue. This is not a national issue. This is a global issue that affects every single one of us. Until we reduce the amount of circulating virus and we get vaccinated, we don't get to return back to normal. And it's as simple as that.
Doctor, are the vaccines effective against Delta?
Vaccines are effective against Delta. It is very common to see individuals who still get sick despite having vaccines. We see this every year with the flu. The Pfizer vaccine studies show 88% effectiveness 2 weeks after getting your second dose. But that does mean that 12 out of 100 people will potentially still get the illness. But we know that it's the disease-sparing vaccines. They're less likely to be severely ill, less likely to end up in the ICU, less likely to die.
What do you think it's going to take to see if schools can 100% reopen or not in the fall? We were having a conversation here that the markets perhaps might actually believe that something is wrong if schools don't reopen, if that is the catalyst. What do you think it takes for us to get there?
I think we've learned a lot about how to reopen school safety. In the spring of this year, my daughter's school opened. They used pods. They, they created pods of play. Classrooms didn't interact. There was temperature checks. Yes, it's a bit strange taking your child and you go temperature check every morning, but I felt perfectly safe that my child was in school with the precautions that were put in place.
Bhakti, I want to talk to you about bacteriology and microbiology because I just don't buy this for a minute. We cured ourselves from the horrific child killer diphtheria. I was on the back end of polio. Taylor, I believe, or Anne-Marie mentioned earlier, Senator McConnell's battle personally with polio. I don't buy it for a minute that we haven't done this before. From bacteria, we got vaccinated. From viruses, we got vaccinated. What's different this time?
There's nothing different. Vaccine innovations have been ahead of the curve. Luckily, we had the mRNA vaccine studies that were done for cancer drugs, which allowed us to find a suitable vector for the vaccine and implement it rapidly. We also do have viral vector vaccines as well, which are extremely innovative. So nothing is different. We have actually used all of our lessons learned and applied them to the COVID-19 pandemic. The challenge is therapeutics. So with bacteria, we have antibiotics that affect the ability of the bacteria to reproduce and stop infection. Viruses have always been more tricky due to the way that they replicate.
How do we incentivize these people? I mean, people are saying, give them money, do this, do this, do this. How do we get this fixed at a Joe Biden speed?
So there is two groups. There is the hardcore conspiracy theories, vaccine skeptics.
They're never going to be.
Right?
I get it.
You cannot change, right?
I got it.
But the majority of the people are people that have underestimated their vulnerability to getting sick. Second, overestimated the side effects of the vaccine. And because they're kind of just lost, they chose to do nothing. Now, that is a group that we target. We need to promote positive messaging around the vaccine. We need to educate people with clear, concise facts about the true risks of vaccination and stop overinflating the few side effects that have been seen or the isolated cases in social media.
Do you think full authorization would help push this issue forward and move away from just emergency use authorization of these vaccines?
Unfortunately, yes, right? So I think for the lay public, the difference between full authorization and emergency use authorization is one of the big sticking points in their vaccine confidence. The truth of the matter is the way that these studies were conducted was rigorous, just as we would have conducted any other new drug intervention study. Due to the national reporting software, the VARES software from CDC, we have national reporting on vaccine side effects, which is phenomenal. And the use case here is in the millions. And so I think having that sticky label that says this is fully authorized, I think will improve people's confidence. Although scientifically, it is unnecessary.
Doctor, we appreciate your effort, that's for sure. Thank you very much for being with us this morning. Dr. Bhakti Hansati there, Johns Hopkins University Associate Professor of Emergency Medicine, on some of the issues, Tom, and those issues are always far more complex than some people make them out to be.
I think we touched on that with a line of, what we've done over 150 years of taking these terrible illnesses away. John, can I just say to our team that's booking all this, this has been a real joy through 18 months of this natural disaster to speak to actual multi-degreed adults who know the science and know it cold.
I can't wait to stop talking to them, and they can't wait to stop talking to us. Who would have thought, Tom? And I've spoken to them away from these interviews, and we're all surprised that we're still doing this 18 months on. I think many of us thought we would have wrapped this up.
We're talking third stage here with this unvaccinated. Again, the Keating-Shapiro article in the Washington Post on cases, on hospitalizations, on deaths, John, is devastating.
Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. In your equity market, up 15, we advance 1/3% on the S&P 500. Yields are higher to 124.50 on 10s. From New York, this is Bloomberg.
We're in that peak moment, peak growth, peak fiscal. I still think we have a ways to go on the cyclical recovery here.
Our view is that the economy is likely to continue to be strong, but we are transitioning.
We not only have growth fears, but we have questions about what the world looks like once we get through this.
Starting to see some cooling global mobility trends, which means reopenings are pausing a bit.
Some of this will ultimately defer growth into 22, which is exactly what the equity market needs right now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with the wonderful Taylor Riggs. Lisa will be back with us on Monday. Your S&P 500 up 14. We advance 1/3%, and we have a divide, Tom. We talked about Ben Laidler of eToro saying, buy this move lower. A lot of people have done. Then you've got Morgan Stanley's Mike Wilson, who still believes the index level correction is in front of us and not behind us.
Yeah, there's a lot of different opinions out there. That's what makes the market go. What we can say, John, is I'm going to just scientifically say we're 2/3 of the way back from the agony of a few days ago, and it'll play out. John, what am I watching? I'm watching the same thing I was watching and preparing for 6 weeks ago, which is earnings report. J&J this morning, they upped the forecast.
The outlook for Coca-Cola better too. We saw that with Pepsi in the past week as well. Tom, I'm looking at the rates market. I'm looking at treasuries, and I'm witnessing a consensus view totally break down. It's in pieces on what is going on with this 10-year yield. And the last 24 hours was a fantastic example of that, just capturing the degree of uncertainty that still exists and persists. 125 this morning on 10s, 112 yesterday. And what led it, Tom? Not much at all, nothing. Just a market living its own life.
I'm going to suggest that uncertainty is what drives a market. Netflix, I guess yesterday, Nathanson will be with us later with Moffett Nathanson. And, that's one story. There's Coca-Cola, which I haven't even looked at yet, John, to be honest. But all of these individual stories sum up to corporate America adapting to the cards that they're dealt.
And Verizon doing the same thing right now as well. Full year adjusted EPS, $5.25 to $5.35. Had seen $5 to $5.15. So another one drops, Tom.
In the banner here, I missed this again. Organic revenue, which is, a really important food statistic. Coca-Cola, 12 to 14%, single point at 13%. And the estimate was an 11.x%. That's a better number.
And United joining the party in the past 24 hours, Taylor. They're part of this too.
They were, and the clarity that you're getting from CEOs this quarter is starkly different from the lack of clarity we had last quarter, the lack of clarity the year before, when they were pulling the forecast and saying, we frankly don't know. So you're getting United really looking at profitability this quarter, third quarter, fourth quarter, seeing a full recovery of demand by 2023. John, I'll repeat my statistic again. It feels like the full recovery of demand is back if you have been flying lately.
Isn't that amazing, though? Taylor Riggs International is not back in a big way, and here's the United Airlines CEO coming out with the following quote. Our airline has reached a meaningful turning point. We're expecting to be back making a profit once again. Aren't you surprised by that, to have that level of confidence right now already, given what's happening all around us at the moment?
I think they've really good visibility into the pipeline, and they see people booking months out saying that we cannot wait to get back. I hear we have a producer joining us coming back from Hawaii.
I do. I understand that, Tom. It's okay for some, isn't it? Taking these long vacations to Hawaii.
You know, here we are, John.
to
I
Greece.
got a day here. You get 12 hours there.
We should have been in Van Horn, Texas yesterday.
Well, we could have. I thought Emily did a great job.
I think she did a fantastic
I'm scared
job.
stiff of the rattlesnakes.
You don't want to go down there?
Not really, not at
Next
night.
time.
I don't want to be walking around like Tim Stenovic.
If we've
at
done
night.
one, does the next one really matter? Do we have to cover that?
That's
Are we done
really,
now?
John.
We stop
John,
covering
let's
it.
stop the show. This
It
is
stopped,
really,
believe
really,
me. People
really
have stopped
important.
listening. Carry on.
John, this is really, really important. What do they do the next time when they got 3, 4, 5 people going up and nobody on board is named Bezos?
That's
an interesting
I imagine
question.
we pay less attention, Tom.
That's an interesting
Your equity
question.
market this morning up 13 on the S&P 500, advancing a third of 1%. Outside of that, into the bond market. Talked so much about this bond market in the last couple of months. 124.33 is still exceptionally low, considering some of the data that's coming in America. Yields are higher by a couple of basis points on the session. Euro dollar, we'll talk a little bit more about Europe as the day progresses. Euro dollar 117.73. Negative Taylor, almost 0.1% on that currency pair.
We are. Let's take a look at, you mentioned the 10-year yield at 124.33 and the reflationary trade that's been back up in the last 2 days. What does that mean for a 20-year bond auction that we're going to get today? About $24 billion. You're up 9 basis points again in just 2 days on the 20-year. The concessions that are needing to take place, and where are we when it comes to inflation? Let's see how the 20-year bond auction indeed does go. You want to speak about higher asset prices. As Tom says, BitDog, you're back up above 30,000. Everyone says that that's the key technical level. Comes on a good day of the B word event. Not a bad word, just a good name for an event. Elon Musk, Cathie Wood, Jack Dorsey going to be hyping up Bitcoin, of course, at that event. And finally, the last thing I'm going to be watching comes back to corporate earnings. It'll be Texas Instruments after the bell, after the slew that we've already gotten. The confidence that the CEOs give us when they talk about that forward guidance and the return of that confidence.
Netflix part of that promise too. Taylor, thank you very much. Netflix in the pre-market down 0.7%, promising up the growth, Tom. I came to you for an inside look at Netflix, and you were kind of bang on about the previous quarter.
Yeah, I don't know. It's what it is. I'm not too stressed about it. What I don't understand, John, and Paul Sweeney is expert at this, is how do 5 or 6 or 7 streamers play? I still don't get that.
Barron's going with subscription fatigue, Tom. Would you go with that line, subscription fatigue?
I'm canceling. I'm like, does anybody watching this know I cancel it?
Are you
I'm
looking
like
at that
everybody
bill
else.
at the end of each month, Taylor, and thinking there's too many here now, we need to cut some?
I did that last year. I hate to admit it.
Last year? What, coming out of the pandemic? In the summer? You did it early?
It's old-fashioned books, John. Got to get back to the old-fashioned
you were reading
books.
through the pandemic. That's original.
Tom is a good point. I don't think you get 5 or 6 streaming services. I think you see further consolidation. The analyst could answer that question better than I can.
Looking forward to that conversation in about 60 minutes' time with Team Moffett-Nathanson. Drew Mattis joins us now, MetLife Investment Management Chief Market Strategist. Drew, got to start with the bond markets and what on earth is going on with the labour market. So let's start there first. The labour market. You think the September period and the subsequent months are quite critical to get a feel of what's going on with this economy. Why, Drew?
Sure. Taylor was mentioning how important it was, to kind of have some visibility into what's going on and how things are working out. August and September are going to tell us a lot about the labor market and then the consumer and the economy as a whole. If schools don't reopen, we're going to have serious problems, keeping up the growth rate that we've had. On the contrary, if schools do reopen, you're going to put almost immediately 1 million people back to work who were employed by those schools. And then on top of that, you're gonna remove the child care story from the equation, and a lot of people who've been concerned about child care and unable to work because of child care issues are going to be able to return to the workforce. And so we're going to see, the supply side of the labor market actually expand rather dramatically, potentially in the next couple of months. And if that happens, some of the labor cost stories that people are beginning to worry about should begin to fade, and that should be overall positive.
Well, let's get to the if part. Tom and I were talking about this earlier this morning, and I think it's really, really important. If anything develops that threatens return to school in the fall, in September, if that kind of headline starts to drop from state to state, from city to city, Drew, what would it mean for this market?
I think, you've seen the noise around different variants, et cetera, and those are concerning to people. And so, yes, I think, when you see news like that, then people begin to worry and then people begin to pull back. I've told Tom and you this a number of times, which is, when there's so many different variables, right? I mean, I don't know how many degrees the person on, in the segment before me has, but I'm going to guess it's a lot more than I do. I don't really understand exactly everything she's saying, but I have to make decisions on investments based on everything that I think I know. And so there reaches a point where there's so many things that you have no expertise in that you drift into a risk on, risk off mode. And I think that's what you're seeing in the market is people get overwhelmed with information that they can't process. And so they just go, you know what, risk off. And the same holds when, everything's looking great. They're like, I don't need to process the information, risk on.
Drew Francis Donald of Manulife last hour kept saying that peak growth may not mean peak margins. Do you agree?
I'm watching margins very carefully. I'm not looking, though, at S&P margins. I'm looking at economy-wide margins, right? I want to know if small businesses are doing okay, because they're going to be hiring the people. I want to know if the big companies are doing okay. And one of the things about this recession, which is actually somewhat problematic, is it didn't have any of the positive effects of a recession. We tend to think of recessions as just big negative beasts. But they actually, they clear out a lot of dead wood in the corporate sector, and that allows for the economy to flourish when we come out. That didn't happen this time around. So, it's going to be interesting to watch how margins evolve over the next couple of months and quarters, because, margin compression typically leads to a recession. And so we need to be keeping an eye on the idea that maybe what we went through wasn't, was a recession technically, but maybe didn't have the effects that we normally would associate with a recession.
Just a little bit of Austrian school coming from Drew Mattis there, Tom Keene. Drew Mattis of MetLife Investment Management, the chief market strategist. Drew, it's good to catch up. It always is. Thank you, sir.
Thanks,
Your
John.
bond market yields higher by 2 basis points. Tom Keene to 124 on 10s this morning.
Yeah, 124. Let's back it up, John. On the 210 spread, we are under 1 percentage point, 100 basis points. We come back above that. To me, John, we're in range on bonds. Maybe they need more information, more economics. What I need is more earnings reports. David Wilson will give that to us on Bloomberg Radio and Bloomberg Television. And, John, I'm just loving what I'm seeing with earnings as we saw over the previous 2 months or so.
Let's talk about something you and I aren't loving right now. Have you seen the floods over in China?
Horrific.
Just absolutely dreadful.
John, this is the breadbasket. This is 200 miles southwest of Beijing, 200 miles northwest of Shanghai, and this is the heart and soul of their agriculture district. John, they're biblical.
And Tom, the province of Henan has gone from heat waves to flooding just like that. Yeah. Just like that. Unbelievable pictures. Coming up in the next hour, Daniel Morris, BNP Paribas Chief Market Strategist from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. For our audience worldwide on radio and TV, this is Bloomberg.
With the First Word News, I'm Leanne Gerrans. Senate Majority Leader Chuck Schumer is on track to fail in his attempt to start debate on an unfinished bipartisan infrastructure bill today. Republicans say there is no way a deal will be reached in time, and they won't vote to open debate until there is text spelling out the agreement. Key Donald Trump ally Tom Barrack remains in jail in Los Angeles after being arrested on illegal lobbying charges. The founder of Colony Capital and 2 others are accused of unlawful efforts to advance the interests of the United Arab Emirates in the U.S. He is also accused with obstruction of justice and making false statements to federal agents. Barrack's lawyer says he is not guilty. Office workers here in London want a big pay rise to return to the office. According to a survey by workplace firm Lockerty, only 17% now say they want to return full-time, but cash would convince 43% of the workers they want an average of about $7,000 more to go back. The Milwaukee Bucks have won their first National Basketball Association title in 50 years. Giannis Antetokounmpo scored 50 points to lead the Bucks to a 105-98 win over the Phoenix Suns in Game 6. That gave Milwaukee a 4-2 win in the best-of-7 series. Antetokounmpo was named named the most valuable player. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
With our bipartisan infrastructure framework and our Build Back Better plan, I think we can turn this great movement into economic boom for some time to come. And I really mean that. I think we're on a cusp of not only getting this out of the hole, but setting us on a path that's going to generate significant continued economic growth.
The President of the United States there, optimistic about the future for the U.S. economy. From New York City this morning, good morning, alongside Tom Keene. I'm Jonathan Ferro, together this morning with Taylor Riggs. Lisa back with us on Monday. Here's the price action, just to get you up to speed briefly. On the S&P 500, advancing 11 points, advancing 0.26%. You will not let this go, will you?
No, I won't.
Yields are higher by 2 basis points to 124.33 on 10s. The euro a touch weaker, euro dollar 117.71, negative 0.08% on that currency pair, and a 68 handle on WTI, Tom, 68.21. Crude heading higher, up by 1.5%.
Yeah, crude's interesting now. I haven't touched on that. T-minus 13 minutes until Romaine Bostick. Right now in Washington, Emily Wilkins with us with Bloomberg Government. Emily, I want to go philosophical, which we can do on a lazy July morning in Washington. What kind of New Deal is this? How do you and the zeitgeist of Washington identify this Biden New Deal?
A lot of people in D.C. are really rushing to compare this with what we saw at the end of the Great Depression with other sort of big federal programs. But I think really, Tom, the thing that we need to focus on now is that we don't have a lot of details on what exactly is going to pass. And as we're seeing today, with the bipartisan infrastructure bill, there's still a lot of bumps in the road to getting this done. I mean, this vote that's going to be held later today, we already know that it's not going to be able to pass. They're not going to be able to start debate on this bipartisan infrastructure bill. Of course, Chuck Schumer, Senate Majority Leader, he can just reset up the vote for a few days from now. He can have this vote again when there is a bill that's closer to being ready. But I think from the vote today, you're just seeing the fact that Schumer wants to get things done. He feels a very tight timeline here.
How does Senator Schumer's dialogue in the Senate affect the House? How do they take his statements in the House?
I mean, the House definitely pays attention to what Senator Schumer says, just like I think to a certain degree the Senate pays a lot of attention to what Speaker Nancy Pelosi says, because both chambers know that they will need the other to cooperate if they want to pass anything. And right now, this bipartisan infrastructure bill, it's not looking so great in the House. You see the head of the House Transportation and Infrastructure Committee, Peter DeFazio, he's come out several times over the last couple days and really slammed the bipartisan infrastructure bill, saying that he's not going to support it because it doesn't have measures in there that deal with fossil fuel pollution. You're seeing a number of other lawmakers join him. I mean, this bill already has issues enough in the Senate right now, with them still trying to come to negotiations after weeks and weeks of trying to get there. And now it looks like the House isn't going to be satisfied with whatever potential package they pass.
So, Emily, is it fair to say the biggest opposition to this particular bill is coming from within the president's own party?
Yes, absolutely. I think there are lots of concerns that Democrats have, and they're under a lot of pressure as well. There is a sense among Democratic activists as well as Democratic lawmakers that this is sort of their big opportunity to get something done. They have the House. They technically have the majority in the Senate, however slight it might seem, and they have the White House, and they want to make sure that they're getting something done. And they know that once you get to next year, once you get to 2022, it becomes harder and harder and harder to move legislation the closer you get to November's election.
Emily, economists on this program are looking for a nice handoff between the public sector to a private sector spending package. Is there a way to pull in the private sector here?
I mean, I think Republicans, to a certain extent, definitely hope there will be. There has been talk about public-private funding in regards to this. But look, I mean, a lot of this money that's going to go out there for roads, for bridges, for infrastructure, I mean, this is something that's going to go down to the state level and to the local level and will be implemented from there. And that takes time for the money to actually get distributed, for these projects to get underway. But to a certain extent, it's the federal government that allocates the money, and then it's the state and local governments that really sort of get into the weeds as far as who's getting it, who's doing the construction, where these projects are going.
Emily, everybody's geared up to move on, to focus on these big picture items, and I keep coming back to this. We just seem to be overwhelmed by events more recently around the Delta variant, now the dominant strain, if we can even call it a variant now, just seems to be it at the moment. Emily, what's the administration doing about it?
The administration yesterday, news broke that a White House aide as well as an aide for Speaker Nancy Pelosi had both tested positive for the coronavirus variant. Yesterday in Congress, you saw lawmakers starting to mask up again after several weeks where they didn't wear masks. And there is a new sense that there's really is an issue with the Delta variant on the Hill. You can also hear it in Republicans. Seen the #2 Republican in the House yesterday, Steve Scalise, come out, say that he had gotten his first vaccination, encouraging others to get vaccinated. So there's definitely an increased sense both in Congress and in the White House. The White House has been talking with Fox News over some potential concerns about individuals they've had on their show that have been anti-vax. They've been talking with Facebook about a way that they can sort of curb misinformation in regard to vaccinations. And with the Delta variant, and that's just going to add only another layer of urgency in what needs to be done.
Where's President Trump in all this?
I mean, we've heard President Trump come out and say in the past that he does support the vaccination, that he does encourage people to get vaccinated. It has not been one of his bigger, bolder, and louder messages, but he has said it and he has come out there. I think to a certain point, there's so pressure, I think, on all Republican leaders, as well as all Democratic leaders at this point, to do more and to keep with the message that if we really want to get back to fully normal, if we want to make sure that more Americans aren't losing their lives to COVID, people do need to get vaccinated.
Emily, thank you. It's good to catch up. Emily Wilkins down in Washington, D.C. Tom, you keep going back to that, so let's talk about it. Most people agree with you. The former president did not do enough to push this issue. Here's my question, though. Even if he came out now and said something, do you think it would make a difference, Tom?
I think it'd make a huge difference to his supporters. But as you mentioned earlier, John, this is not just about some stereotypical political niche. There's much more complexity going on here, particularly as we see hospital and service vaccinations in some of the big cities. I mean, to say it's one group, one cohort is just wrong.
And again, Tom, when it comes to the hesitant amongst us, is it the hesitancy that's holding people back, or just blanket anti-vaxxers that are holding people back?
No.
There's a difference between the two things.
Yeah, Dr. Hansotti was great on that at Johns Hopkins. There's two groups. There is a group, there's never going to be vaccinated. That was true of polio, whatever. And then there's another group that really needs to be sold on it because they're just tentative about science and the fears of these very powerful things.
We'll try and stay on top of it. We'll stay on top of the market action too. This is what the S&P 500 looks like. On the S&P, we advance 8 points. We're advancing around about 0.2% on the S&P 500. Outside of that, into the bond market, yields are higher by a couple of basis points to 124 on 10s after having a little look at 112 yesterday. Taylor Riggs, you're on top of this through the afternoon. What do you make of that turnaround as the session progressed?
I've completely heard over and over again, half of this is technical, not talking about shorts being squeezed, but if you're a fully funded pension plan, you want to lock in your liabilities now, you go to the bond market, you get out of the equity market. So it has been that rotation back in, though the further lift higher has some people questioning where we are on that reflationary trade.
Such a good point. Your 10-year, 124 from New York City alongside Tom Keene.
T-6 and counting.
I'm Jonathan Ferro, together with Taylor Riggs. Remain next on Bloomberg. Live from New York City for our audience worldwide on TV and radio. Here's the price action. Coming into the opening bell 2 hours away, we advance once again on the S&P 500 by 7 points. Call it 8, 0.2% higher. The Nasdaq does not participate. That's just a little bit softer, negative 0.2 there. The Russell doing nicely though. The small caps again, where some of the outperformance is after some of big underperformance over the last couple of months. We're down on the small caps by 0.6%. The main attraction, the main event, as you know, over the last couple of months has been the bond market. Switch out the board and get to the bond market. 2s, 10s and 30s look like this. Your yields are just a little bit higher, the curve just a little bit steeper after the events that we took place in the last 24 hours. Just unreal to see the 10s go from 112 all the way through to 125. Right now 123.67, yields higher by a basis point or two, up 2 or 3 on a 30-year, getting back somewhere into the 190s at 190.29. This is what I want to do, Tom. I want to switch up the board and get to the FX market. Euro dollar. This doesn't get talked about enough. We talk about the highs of the year on a 10-year at 174 on a closing basis. What about the highs of the year on euro dollar? Euro strength, peak euro strength, 123.27, and it took place in the first week of 2021. ECB, that takes place tomorrow, that meeting. And Tom, SocGen out with a note, really highlighting the stark contrast between the ECB, the BOJ and the Federal Reserve right now, and suggesting, after calling for 125 to 130 on euro dollar, now suggesting that maybe the peak is in for this currency pair.
Well, you want, I mean, Lagarde's major goal here is not to move euro. I mean, that's all there is to it. She wants stability here as well. The consequences, John, of a breakdown to a 116 handle, that's a huge deal.
Right now, 117.75, just south of 118. That's the FX market. We've got to do a couple of things now. One, got to get some stocks on the move. And two, we've got to say happy birthday to Romain Bostic, who took his birthday off yesterday, so we didn't get the opportunity to do that. Happy birthday, Romain.
Thank you, John. It was a wonderful birthday. Next year, maybe we'll spend it together at 5 a.m.
I would love to do that.
In the morning. Absolutely. But let's get you some of the movers going on out there right now. It is earnings, of course, this week, and that's pretty much all the talk. Let's start off with Coca-Cola. A pretty big beat here. Probably the most notable thing that we saw with Coke in this earnings report was a 25% jump in case volumes on those non-sugary beverages. So think like the teas, the coffees, some of those waters. Those shares getting a nice little boost here, up about 2% here on the day. J&J having a beat and raise quarter itself. Interesting jump there, not only in pharmaceutical sales, about 17% year over year, but a 63% jump there in medical device sales. Some of that, of course, some of the base effects, of course, from the lockdowns that we had a year ago. Of course, speaking of base effects, Netflix, that's really what the story is right now. They added about 5.5 million subscribers in the first half of 2021. That would normally be great. The problem is, of course, they added 26 million subscribers, of course, in 2020 first half here. So the base effects here of coming off of that lockdown causes some concern. The forecast for Netflix going forward in Q3, that's also coming in light, about 2 million subscribers below what the street was looking for. Flip up the board because there are some stories out there that actually aren't about earnings. Keep an eye on Apple. An interesting story going on over in Zhangzhou in China. This is in that central part of China that's been hit hard by floods. This area is also the central area where most of iPhones are assembled. Hon Hai, Foxconn, all have big facilities there. That city is effectively under lockdown right now because of those floodings. This is, of course, at a time when iPhone production is supposed to be ramping up. It'll be interesting to see what that does to Apple shares, which, of course, a week ago today hit a record high. Moderna moving lower here on the day, down about 3% here in the pre-market. Of course, this company going to be added to the S&P 500 effective today at the cash open. Now, this is a stock that's up about 194% already, which would effectively make it the best performer in the S&P 500 this year by far. But of course, you typically tend to see this with these additions to the S&P, where basically all the pop comes off of the announcement, and then once it gets added, you see sort of a flat line, maybe even a pullback. These shares had rallied about 20% since that July 15th announcement. And finally, Ford, an interesting announcement here by Ford and Argo AI. They're actually going to roll out robo-taxis. The robo-taxi age is finally here, guys. It's going to start out in Austin, Texas. 100 vehicles only, but they expect to ramp it up to Austin. It's where everything happens right now.
What's a robo-taxi going to do on Fifth Avenue?
Cause some damage, my guess.
I mean, I just, okay. I'm sorry. I'll believe it when I see it. Romain Bostic, and a real focus on earnings here on the close.
Thanks, Romain.
This afternoon.
I guarantee if it happens, Tom, you'll be in it.
Robo-taxi.
Guaranteed.
Yeah, please. This is important because John and I are in the timeout chair because we don't look enough at preferreds. Christopher Whalen, he expert on the American financial system, will hold a beverage of his choice in his hand and say, Tom, consider preferreds. We consider preferreds higher yielding, maybe not with the equity pop, with Colin Martin of Schwab Center. Colin, thrilled to have you on something we ignore. I'm going to make 10.6% per year off the 2018 Christmas Eve low. I didn't make 29% in the stock market, but with preferreds, I still did better than good, didn't I?
You did great if you bought back in 2018. I wouldn't expect those returns to be as strong going forward, given where prices are today, though.
I mean, the prices have come up. You still get the coupon, though, right?
That's right. I mean, in the bond market, where can you get yield? There's very few places, and you have to take some risks. And one of those markets is the preferred securities market. You have interest rate risk, you have credit risk, but you get coupons, north of 5% on average. Now, Tom, you have to kind of ride out the volatility. They're meant to be long-term holdings, but if you're looking for income, if you're a little bit aggressive, you can pair it with some high-quality bond investments. Preferred securities can be a really good way to boost the income payments of your overall portfolio. You just need to ride out the ups and downs.
What would your preference be right now, given what's taken place in the last couple of weeks? Rate risk or credit risk, Colin?
Oof. I'd say credit risk right now. That's been our stance for a little while. It's tough to take much interest rate risk because we do think yields are going to rise as the year progresses. But the problem with credit risk is you're just not being paid to take that credit risk. We saw a little bit of a flare-up on Monday. Obviously, with stocks selling off, we saw high-yield credit spreads rise by the most in a single day all year. Unfortunately, they're still really tight, 3% or so, yield compensation for taking that high-yield risk. We think you can still be in it. We think the low-hanging fruit is definitely gone. But if you're willing, again, just like prefers to ride out the ups and downs, earn a little extra income, we think you can be in high yield, but we are a bit cautious given such low yields today.
Isn't that the number one issue, that at any point, with the exception of maybe a couple of weeks back in March of 2020, you could always say, I don't think I'm being compensated for the risk assumed in the credit market, Colin? That's just been true now for much of the last 10 years, hasn't it?
Well, in hindsight, we had some opportunities after last March. I mean, yields were trickling slower. But you're right. I mean, leading up to the pandemic, we had this, 2 or 3 year period in both investment grade and high yield where spreads were just very, very low, which means you can still take that risk, but you really need to be selective. And if you just kind of buy the whole market, you're not really, it's unlikely that you're going to outperform by a lot. But given where we are today, we still think you can own it. You can boost your yield there, but be prepared for volatility. I think the risk right now with the high yield market or anything with credit risk is the concern is peak growth expectations, whichever you want to call it. And if we're not going to get much more monetary support or fiscal support, the question is, what does that do to risk assets, and how much more volatile will they be?
Colin, the title of your note is, if the economy is so strong, why are bond yields falling? Answer that question, because we can't figure out why the 10-year is stuck at a 125.
We're scratching our heads sometimes as well. One thing we pointed to in that article was the potential for the Fed to get closer to its tapering of its bond purchases, because it sounds a little bit counterintuitive that as the Fed slows the pace of its purchases and then ultimately stops purchases, that yields would fall. But that was the case during QE1, QE2, and during the QE3 period, because the end of its QE means we're closer to tightening. And what that means is slower growth and inflation expectations. So we weren't surprised that we saw yields fall. Maybe the magnitude of the fall caught us off guard a little bit. But I think the good news is that we are back up a little bit off that 112 low that John referenced earlier.
Colin, stay close. Bit of news coming out of China, Hong Kong to be more specific. For anyone that's been following the fortunes of the property developer Evergrande, the Evergrande Group, HSBC, Bank of China, the Hong Kong unit, and at least 2 other major lenders have stopped providing mortgages to buyers of the group's unfinished residential properties in Hong Kong. That reporting just coming out, Tom, in the last couple of minutes. The fortunes of that particular developer, not great more recently, at least the perception of what is going to happen with that group, given what's happened in the market more recently on both the equity side, Tom, and on the debt side as well.
This is not a small item, and it goes over to commercial development and residential development within all of China. What really gets my attention here, John, is the first phrase in our Bloomberg coverage is HSBC Holdings PLC. This is not about China banks, SOEs, if you will, mopping it up. The Western banks are involved.
Colin, just a final word on China and the complexities of investing with anything related to Hong Kong and China right now.
Well, yeah, that's a concern. When you look at a country like China or anything emerging markets, you're going to get less disclosures, less protections, and you're taking risks by investing in really anything that's touching that. So that's always a concern when we're talking to our clients and when you're investing in any emerging market, really.
Colin Martin, good to catch up. Around the World Tour. with the Schwab Center for Financial Research Director and Fixed Income Strategist. In your bond market right now, 123.50. Yields just off the session highs of about 125. Yields higher by a little more than a basis point on the S&P 500. Advancing 4 points at the moment. Tom, we're up about 1/10%.
Yeah, it's a nice pop today. I'll be fascinated to see which way the equity market breaks. And John, I'm going to say it again. It's based off earnings. To me, that's the elephant in the room.
Sure.
Constructive elephant, bad elephant. I don't know which. But to me, earnings are everything.
Interestingly, though, giving up some of the gains this morning,
Yes,
Taylor,
we're giving
almost
up,
unchanged now. We were positive by 1/3, 0.4%, and now pretty much up by what? Not even 1/10%.
And my key questions to some of our guests on the close have been, where are we on the sweet spot for lower yields being a boost for these valuations within the equity market, or lower yields hinting that there's something more nefarious going on? We're more concerned about peak growth that might have been behind us.
In the eye of the beholder, really, isn't it? This bond market move is whatever anyone wants this bond market move to be at the moment. There is no clear narrative, no agreed consensus. That just gives you an idea of this inflection point that some people think we're at. The S&P 500 now almost unchanged on the day. Yields higher by a basis point or two on a 10-year to 123.67. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. The coronavirus has taken a dramatic toll on U.S. life expectancy. It dropped the most in more than 7 decades last year due to hundreds of thousands of early deaths. The pandemic's disproportionate toll on communities of color widened the existing gaps in life expectancy between white and black Americans. That is all according to the CDC. Widespread flooding in central China has forced the evacuation of about 100,000 people from a city known as the world's biggest production base for iPhones. The city of Chengzhou received 18 inches of rain from Monday afternoon through to Tuesday. That was equivalent to about 8 months of the city's average annual rainfall. The wave of defections has resumed at Credit Suisse in the wake of scandals involving Archegos Capital and Greensill Capital. 4 more senior bankers have left the Swiss bank. So far, more than 30 bankers have left Credit Suisse since the collapse of the two firms that cost it more than $5 billion. And Brisbane has been selected to host the 2032 Summer Olympics. The Australian city won under a new selection process that saw it as the only candidate. That process was overhauled back in 2019 to prevent bidding wars among cities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
It's not just that we can go back into party mode and hope that this pandemic, this crisis is over. I think we will be seeing, I'd say, vastly diverging patterns over the next 12 to 18 months. There will be some countries with great recovery rates. There will be others that will struggle much more. Again, this is not over, and let's not chart a straight line.
This is not over. No party at Julius Baer. That was the Julius Baer CEO, Philip Rickenbacker, a little bit earlier. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning, I'm pleased to say, with Taylor Riggs. Lisa back with us this coming Monday. Here's your price action this Wednesday. Equity futures, positive 5 points, advancing a little more than 1/10%. Just about holding on to this morning's gains. Yields are higher by a basis point to 123.50 on 10s. Talked a little bit about the euro. We'll talk a little bit more about it a little bit later. Euro dollar 117.72. Negative a little bit. We're down almost 0.1%. Jeff Bezos, Tom Keene, saying the quiet bit out loud yesterday following that launch. Here's the quote. I want to thank every Amazon employee and every Amazon customer.
He thanked me.
Because you paid for all of this. Heavily criticised about how in some parts of the country Amazon staff are treated, Tom. just maybe just a touch of self-awareness after the euphoria of the events yesterday?
The guy's every word is scrutinized. And there's one part, justifying space, that's always been there, John, and part of it is the billionaire debate that's out there right now. My question is, where's the billionaire debate 6 months on if they're not going up into space? I mean, will the interest still be there? I think the jury's really out on that.
I think the interest will be there, Tom. I think it will be. I think this is going to move us forward.
And again, we're going to go to orbital. We go from Shepard to Glenn, and that will be interesting.
What's the difference, Tom, just quickly?
Well, it's the same difference as 1961, Shepard, Grissom, and on to 3 orbits by John Glenn to show we were like Yuri Gagarin and the Russians. Orbital is different, much higher speeds, tensions. And the big thing, John, about orbital is you got to get them back down to Earth safely. It's radically different in the return to Earth than suborbital. And I would, the courage yesterday of those 4 tourists, if you will, was really remarkable. Right now, he is steeled to have courage next week. David Wilson with us. It's a trickle of earnings now, but next week it's not. And the secret that David Wilson and I have on earnings is the headlines of Bloomberg. And there's a headline, David, that says it all. Coke sees its 2021 consumer prices up 2 to 3% from where they were 2 years ago. All these granularities matter, don't they?
Well, they do. And really, companies' ability to raise prices, cover cost increases, that's going to be a theme throughout earnings season. We saw it with PPG Industries. So you're talking paints and coatings. They couldn't increase prices.
They said
enough.
They couldn't raise prices.
Well, I mean, they certainly in the latest quarter they had issues with it, and so when they came out with second quarter results, the shares fell. We're seeing Coke move higher. We've seen other companies move higher to the extent that they have enough pricing power to be able to offset what's happening when you talk about raw material costs or labor costs or transportation costs. Michael Purvis over at Tallback and Capital is actually looking for the S&P 500. Yeah, and looking to get to 4,800 on the S&P 500.
Again, is it you're trying to do your skit here with stealing off of John Farrell?
I wouldn't dream of it, Tom. I just kind of pay attention to what's out there. And what jumped out at me from Purvis's latest report is a chart that compares S&P 500 forward earnings. So you're basing it on analyst projections rather than historical numbers. And the change that's happened over the last 12 months, I mean, you saw increases on a weekly basis, of as much as 40% from a year earlier. In fact, 41%. I mean, you didn't see that after the recession of 2007 into 2009. In fact, you haven't seen that for at least 3 decades, according to our numbers. And the reason, according to Purvis, is what's happening at the more economically sensitive companies, the cyclicals, if you will. He called it a huge explosion in earnings. And so that's really what accounts for analysts' greater optimism this time.
Is he saying this is a cheap market?
Well, he's saying that, earnings growth is going to help all the way into next year. And since he's looking at 4,800, he's got to be considering stocks to be relatively cheap by that yardstick anyway.
Dave, we've been surprised. It's United Airlines, Coca-Cola, Verizon, J&J, every CEO raising forward guidance. Do we have the clarity this quarter that we did not have last quarter, a clarity of the rest of the year?
Well, we're getting more of that because it looks like companies have more of that, Taylor. I mean, they're getting beyond, to some extent, the coronavirus pandemic, or at least they've learned how to live with it. And as a result, I mean, they're more inclined to give projections and more optimistic when they do. So you put it all together, and it's working in companies' favor based on the reactions that we're seeing to earnings so far, at least.
David Wilson, thank you so much. Greatly appreciate it. Really looking forward. Next Tuesday, I think we really launch into a Wilson extravaganza. John, I look where we are. You've given up equities as well, but come on, the VIX from a 25 in the sweat down to 19.52.
Yeah, I'm with you. It's always about the forward look, though, Tom. What's new and what's next? And I went through the Coca-Cola release just under the company updates, the business environment update, the following line. Global unit case volume benefited from the ongoing recovery in many markets. Then it's the second part of this paragraph. Partially offset by the impact of a resurgence of the coronavirus in several markets. So for a company like Coca-Cola, this is about the away-from-home channels improving in a way that we anticipated. But, Tom, whether we start to go backwards in some markets, that's going to be key. We've talked about how policymakers respond to this. need to talk about how corporations respond to this. We had some reporting from our team on the West Coast about Apple delaying the return to office. And then we need to talk about how consumers start to respond to this as well. The return of masking indoors in LA County, Tom, what that does for people's enthusiasm to get back out there. Going to be very interesting to focus on the mobility data in this country and how things start to move in the coming months.
I'm glad you bring that up. I listened to Mayor de Blasio yesterday in New York, and he just said, we're not going there. I mean, he
Tom,
was really clear.
to be clear, I hear the same from Emmanuel Macron in France, that if you're vaccinated, we want you to go and live your life. We're not going to stop living our lives for those that won't get unvaccinated. Not my message, the message from the French leader. But for other countries, Tom, for other regions, look at the lack of tolerance in a place like Australia. We're talking about 40, 50, 60,000 cases in the UK, and people are complaining. Down in Australia, 100 cases, and they're shutting down states, Tom. Get your head around that. Still 18 months into this, we have very different approaches, region to region, country to country.
In the Washington Post article today that I've talked about, Leslie Shapiro and Dan Keating, the deaths aren't there, John. To be very clear, the angst they have over unvaccinated is about cases and hospitalizations at this point.
And Tom, we've done a really good job of continuing to beat the drum on that, the relationship, the link between cases, deaths, hospitalizations. But when you tune into the mainstream media on any given day, put on the TV, what are they talking about? Cases. Does that start to hit consumer confidence?
It does, and I'm not a fan of that. I've been against this case-centric study.
Futures, unchanged, Tom. They're flat now on the S&P 500. We go nowhere. 123 on 10s. Yield time by not even a basis point now. Getting interesting as this session grows older. From New York City this morning, good morning with Tom Keene. I'm Jonathan Ferro, together with Taylor Riggs. Is Lisa coming back Monday or not? I keep saying it.
She's got to climb up the launch pad and get across the gantry.
It's in the diary. I believe she is coming back.
She is coming back.
On Monday. Okay, good. From New York, this
I don't know where
is Bloomberg. On radio, on TV. This is Bloomberg Surveillance.
Peak moment, peak growth, peak fiscal. I still think we have a ways to go on the cyclical recovery here.
Our view is that the economy is likely to continue to be strong, but we are transitioning.
We not only have growth fears, but we have questions about what the world looks like once we get through this.
Starting to see some cooling global mobility trends, which means reopenings are pausing a bit.
Some of this will ultimately defer growth into 22, which is exactly what the equity market needs right now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. A simulcast, Bloomberg Radio, Bloomberg Television. Taylor Riggs pulling the short straw in for Lisa Abramowitz today. And, I got to say, John, everything said and done, what you and I have always said, follow the market and follow the debate. We've got a guy coming up right now who's really pretty cautious versus what we saw in some of our opening guests there.
Well, let's follow the debate around the bond market. And, Tom, it's divided. I haven't seen it this divided for quite a while. There was this consensus about high yields, the smooth path back towards 2% year-end on a 10-year, and we were moving fast in Q1. And then we unwound pretty much all of it in the last several months. We're back down to 123. Yes, we saw 112 yesterday, but still at 123, there's a lot of people scratching their heads about exactly what we're doing down here, Tom.
Well, what we're doing down here, and it's going to be information. What will we glean from the ECB? It's been underplayed, certainly off our New York platform. But, John, it will be a learning experience tomorrow.
Two things to look for, Tom. One is the guidance. Okay, you've changed the interpretation of your mandate, price stability. No longer below but close to 2%, just 2%. How does your guidance change around that? Point two, I think for a lot of people in this bond market, define emergency for me. There is a highly flexible asset purchase program called PEP. You're all familiar with it, the Pandemic Emergency Purchase Program. I think I've got that right, Tom. The emergency part of it is key. Define emergency for us, because that's going to give us an idea when this thing has to be shut down, and then we have to have a conversation about what replaces it.
Well, I have to. Taylor Riggs with us as well today. Taylor, you're the only one I know who's read all 1,840 pages of Fibonacci, and it really comes down to the dynamics of real yield versus inflation dynamics. That's what the pros are looking at.
I don't know how you get higher inflation expectations and a negative real yield that now takes you further on the 10-year to a negative 1.1%, which is what we got earlier this week. And you think about how that impacts financial conditions, Tom, and then you take a look at, again, a 123 on the 10-year, and what foreign buyers, what technicals, what pension funds are buying that.
Yeah.
Every time you think that we're going to get higher, you get buyers into this market enticed by a higher yield.
John, this is a real deal with a real yield of negative 1.05%, negative 1.12, I think, has been the ever greater negative nadir that we've seen. And John, there are separations, there are nuances in the bond market we're all trying to glean.
We saw this at the end of August last year, didn't we? Deep into summer, when we started to see that massive NASDAQ outperformance and big tech, single names absolutely flying. Saw the activity in short-dated call options. You saw real yields plunge ever lower. I just think this one's a little bit different compared to what we have seen, Tom. We had this massive repricing of growth in Q1 of this year. And I keep going back to this growth shock. It was a positive growth shock for this economy. Every single morning, you and I would sit here, there would be another economist upgrading their outlook. That's not the story anymore. And I think Francis Donald Emanuelife nailed it a little bit earlier. It's not about where you think the bond market should be. As an economist, it's not about cumulative gains over the next 3 years. This market is very, very focused on deceleration from this year to next and the year after that. And right now, that seems to be, if you want to pick out a fundamental, that seems to be part of the fundamental story.
Bob Michael, JP Morgan emails in, Taylor's really read all of Fabozzi?
Is that what Bob said?
Yeah, that's what he said.
You should trust Taylor Riggs.
She did.
I believe she's read it.
John, everybody owns Fabozzi. We put it on the shelf and look at it.
Taylor
actually read the damn
I believe that too.
You know, it's an embarrassing moment. John, let's do a data check right now. I'm going to start with $1.93 on DXY and Euro 117.67. Some strength there, I will call it, all in all.
South of 118 going into the ECB decision tomorrow. Euro dollar negative, a little more than 0.1%. Keep your eye on the equity market going into the open. Futures just about positive, up 3, advancing almost 0.1%. And Tom, we're still down there, aren't we? 123.34. Yes, we're well off the lows of yesterday, but 123 is not where many people expected us to be.
Strongly agree with that, with the 30-year bond under that 2% level as well. My eyes are killing me. 1.90% on the 30-year bond. It is important to speak with Daniel Morris at BNP Paribas. They have done a wonderful job of dovetailing, I'm going to call it a cautious GDP call with a measured outlook on the markets, and he delivers that this morning with some real caution. Daniel, identify the why of your caution in terms of investment right now.
Well, to be honest, it's partly driven as much by the technicals as, definitely a fundamental change in the outlook. In terms of the medium term, we're still quite optimistic. We see the reopening, however delayed that may be. We think it's going to progress, but we appreciate, especially with what you've seen with Treasury yields over the last several months, it's probably not the optimum time to be very overweight on risk. So we see the technicals for the summer, we see the demand for Treasuries, we see the low liquidity, and we just feel that this could go a bit further before it reverses. And so right now we're taking a bit more of a cautious position.
So talk us about how you're taking that cautious position, Dan. Talk to us about it. Where are you trimming?
So, for example, we've reduced a position that we had in emerging market local currency debt and have already reduced some of the positions we had in emerging market equity. So really looking at some of the cyclical plays that we had previously set up that haven't been working out exactly as we had hoped, and want to wait for a better entry point to put those back on.
Sound like Tom Keene, a better entry point. Dan, why hasn't that worked out? I look at Japan.
Please.
Look at EM. Look at China this year. It really hasn't worked out. A lot of people came into this year looking for that cyclical story. They had it from the small caps for the best part of 3 months. They had it from the banks for a little while longer. They had it from the airlines too through spring. And then I look at the Nikkei. It's done nothing for me. I look at EM equities. Done very little for me. I look at the China, the Shanghai comp. Done nothing for me. Why, Dan?
Well, actually, I think you keyed in on the right thing here. It is China. If you look at the relative performance of EM versus DM equities, and if you strip out China, which is, of course, quite a significant share of the index, but if you look at the performance of EMX China versus developed market equities, it's actually been flat. So really, most of the underperformance that you've seen in EM equities has been from China, and there are very specific reasons for that. But that also explains, I think, why you've seen the underperformance from Japan, because Japan is also quite exposed to what's happening in China. So I think that's really the key in terms of the underperformance of emerging markets.
Dan, I love your note when you explain the technical factors behind the Treasury rally, because from a fundamental perspective, it's hard to justify a 125. What are the technicals in this rally that bring us down in yield to a 124?
Well, on one hand, you tend to have above average buying from Japanese investors in the summer. Often the PBOC often picks up its purchases. We appreciate we have quite low liquidity. And, it's not entirely the technicals. I mean, there are, so to speak, fundamental reasons to see the decline that we've had in yields. And you've been talking about that the marginal change in the growth expectations has been negative. So that matters. So we appreciate the marginal change. We don't agree with the absolute level that we're at. We just don't see a 1.2 for 10-year Treasury yields at all commensurate with a nominal GDP growth rate that we're going to have in a few years of 5%. But right now, the marginal change is negative. You add the technicals, and it's just that's what's driving the market.
Daniel Morris, I want to climb on what John was saying about EM in China and the idea of BNP Paribas' excellence, the decades and decades of experience the bank has had on the Pacific Rim. Is EM setting itself up for a great fall here? Is the real issue the dynamism, the fiscal stimulus of the Western and developed countries, and EM's going to collapse?
Well, I wouldn't say that that's our view. If anything, we're still quite optimistic on the outlook. We just think the timing isn't ideal at this point. We have to think about really kind of the timing of the recovery. We are hopefully having it now in the U.S. We expect that to move to Europe and then EM at some point. But we appreciate with the delays in vaccinations, with the new variants, that reopening trade in EM keeps getting pushed out a little bit further into the future. But we really think that will come, and that's going to be the opportunity. So we really are just thinking about what's the time to change that allocation as opposed to really having a different view on the opportunity.
And how you allocate, Dan, and maybe let's finish there too, because something that has changed quite markedly over the last decade or so, just the weightings within some of these benchmarks. The MSCI EM index right now is so heavily tilted towards tech, and in some cases Chinese tech, just some massive names taking up the bulk of that. And I just wonder, when you look at the performance or the underperformance of the EM benchmark at the moment, has that been driven by cyclical stories that haven't emerged in the way people anticipated, or just a much more aggressive regulatory regime coming out of China recently?
Well, I think the key distinction to make really at this point, kind of as you say, the dominance of China now and dominance of Asia within EM has really turned the EM index into a growth index, whereas I think traditionally we had the view of EM as a value play. We think commodities, we think financials, and that's not really the case anymore, with the exception of EMX Asia. So if you want to look at the old value play for EM, you want to look at EMX Asia, and that actually did reasonably well when yields were rising. But in aggregate, with 80% of the market cap out of Asia now, it is much more sensitive with what's happening with growth.
Important conversation. Dan,
really
good to catch up. Good to see you. Dan Morris, BNP Paribas Asset Management Chief Market Strategist. And I know for many people that follow this story, it's stating the obvious, but Tom, it's not the old commodity energy story of yesteryear. It's changed quite a lot.
This is a clinic that you just heard, folks, from Mr. Morris on EM. John, EM used to be a phone company and a concrete factory, and that was about it. And that was a value play with the phone company literally acting as a quasi-utility. And you hear the growthiness there from Dan Morris, the optimism that they have.
And now they're just monster tech firms, Taylor. Monster tech firms taking up their place in some of these indexes.
And John, I think there's an interesting point to bring up there, that within EM, how many people are also looking at EM ex China, given some of the regulatory pressures you've seen coming from Beijing on big tech there. How do you include that in some of your risk analysis?
That's such a good point, Taylor. Taylor Riggs alongside Tom Keene.
Stop by more often.
I'm Jonathan Ferro. What was that, Tom?
She should come by more often.
She can come back whenever she likes. I don't think this alarm is too welcoming, is it? The wake-up call, Taylor. You'll take a pass? I'm not surprised. Up 7 on the S&P, we advanced a little more than a tenth of 1%. From New York, this is Bloomberg.
With the First Word News, I'm Leanne Gerrans. Senate Majority Leader Chuck Schumer is on track to fail in his attempt to start a debate on an unfinished bipartisan infrastructure bill. Today, Republicans say there is no way a deal will be reached in time, and they won't vote to open debate until there is text spelling out the agreement. Key Donald Trump ally Tom Barrack remains in jail in Los Angeles after being arrested on illegal lobbying charges. The founder of Colony Capital and 2 others are accused of unlawful efforts to advance the interests of the United Arab Emirates in the U.S. He is also accused with obstruction of justice and making false statements to federal agents. Barrack's lawyers say he is not guilty. Bloomberg's crunched the numbers on U.S. states facing the biggest spikes in new coronavirus cases. They also tend to be the ones doing a poor job of vaccinating their largest racial group, white people. In almost a dozen states, white people make up a low share of the vaccinated population. That was not the case in the earliest months of the national inoculation drive. Verizon beat expectations for wireless subscriber growth in the second quarter. Promotions for new phones helped the carrier sign up customers for new faster 5G service. Verizon also increased its fiscal year earnings guidance. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
There's still a bit of choppiness to our growth. You know, we had the kind of big pull forward in 2020 of subscriber ads. We also had the push in production of some of our kind of key returning titles and big tentpole new releases until the latter part of the year. But overall, the business is performing well.
Spencer Newman there, the Netflix CFO from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro, together with Taylor Riggs. Here's the price action this Wednesday, going into the opening bell, 1 hour, 12 minutes away. Equities up 6, call it 7, advancing 0.15%. Call it 0.16 now. Into the bond market, yields higher by about a basis point or 2 to 123.84 on 10s. I have to say, compared to the last couple of weeks, not much going on in the bond market, relatively speaking, to what we saw yesterday. Well, yeah. That's for sure. Just quickly, Tom, Netflix in the pre-market, negative almost 1 percentage point, negative 0.95%.
International was okay, and domestic, I mean, everybody's all lathered up as well. Right now, we go to your content, where content is king. Michael Nathanson with Craig Moffett at Moffett-Nathanson has just been spectacular on all of his stuff that we watch at home, and is there really an opportunity to make money at it? Michael Nathanson, where's the profit? Meghnad Desai at LSE says it's all about profit. It's all about getting out there and making money. Is there an identifiable profit in the streaming business?
At this point, there isn't, Tom. The profit is going back to consumer. Given all the discounting that's being done, the consumer is grabbing the profit, and companies are subsidizing consumers' content habits at this point.
Comcast was able to make that shift in cable TV to get to real profit, to real cash flow. Do you model an equivalency here to what Comcast did in cable TV, or is this time different?
This time is different, Tom. Netflix is the only company in the next 3 or 4 years that we think will make money just defined as free cash flow. We just see big black holes everywhere, right? And that's why you've had Discovery Warner's merge. That's why Comcast Viacom is rumored to get together. These businesses are really capital intensive. I don't think they have the same dynamics as the linear businesses that we all covering years ago.
And Michael, this seems to be a broad sector call. And that's what gets my attention here. This is neutral Netflix, neutral Walt Disney Company, neutral Roku. You see this across the board here.
Jonathan, the problem is, and I think it's to your previous guess about the cost of money, you've got to look out 5-10 years to see valuation here be supportive. To me, that's just a long way to go, and everyone's so confident about their data points that I just take the other side of this trade, right? I mean, we know streaming is the future, but the market has overpriced these assets. I'm just going to wait for better entry points at this point in time.
Let's talk about what would it take for you to say I'm wrong? Always a good exercise, right. Michael. What would it take in the coming year? Is there anything?
Well, I would say a couple things. One is our view is that the U.S. is a very competitive market, and it's hard to eat profits out in the U.S. streaming business. I think you need to see more people moving to the sidelines, right? You would see more consolidation. You would see Apple and Amazon, kind of step back, and you would start to see. You need Netflix to start growing more quickly in the U.S. which would point to a higher upside, penetration case, right? So I think here you need competition to lessen, and you need, growth to actually start reaccelerating again. So that's one. And then secondly, I think internationally, you would really need to see some of the developing markets where there's very low consumer pricing really start to show signs of pricing power. So those are, to me, the two things, because, the profits right now are in the U.S., potentially, and the growth is coming from low market places like India, low pricing markets. They just don't have great returns on invested capital.
And Michael, I've heard this a lot. The U.S. customer is more profitable than an international customer. How do we get them to be even? How long does that take?
Well, it goes to, a big part of the international story is developing markets, right? So you have Latin America and Asia Pacific as the drivers of growth. But those price points are really low, right? The rest of the world price point outside Europe could be 1/2 to 1/3 the price of American customers. So it's just going to take a long time, Taylor, for pricing to start elevating, right? And before the pricing can elevate, you need to give consumers a ton of content to make the product sticky, right? So you need to invest, and this is the biggest challenge. You need to invest tons of billions of dollars to make the content sticky enough to hold on to customers and then to drive pricing, right? So it takes years of investment to get to that place in which you start raising pricing again.
The other point that you made pretty well is about consolidation. I was reading another of your colleagues' notes talking about Amazon purchasing MGM for about $8.5 billion. Why isn't Netflix making more purchases? Should they be? What does consolidation in the industry look like to you?
Yeah, there's not a lot they can do. I mean, the biggest reason why you make a bet on MGM is for franchises, right? The speed at which Disney built out their direct-to-consumer business is due to the speed tied to their ability to really lift the Marvel, Pixar, Star Wars universe, in streaming. So, but there's just not a lot of franchises like that still available. MGM has a few. Netflix is going to do this. MGM, there's really not a lot that I see available to be bought. I worry, as the analyst covering the industry, that you're going to see Apple and Amazon put even more money to work in streaming because, they have other reasons to do it besides trying to make a profit.
Michael, just a bit of a tricky line this morning, so we're going to have to cut it short. But we always enjoy catching up with you, sir, and we enjoy your work too. Send our regards to the team. That was Michael Nathanson, MoffettNathanson Senior Research Analyst. And Tom, it's that time of the morning, that time of the year where you and I get to complain about the cost of some of these services. What are you paying for Hulu now? Pushing $70
I have never
a month.
Signed up for Hulu.
I can tell you that I did, Tom. And let me tell you, at the time, it was not pushing $70 a month. Don't you think we've all just been conned into cutting the cord, and here we are with these massive bills and about 10 different subscriptions?
Moffett, Nathanson, Greenfield, all the rest of these guys would say yes, yes, yes. That's what's happened, John. I can't say this enough, John. The microeconomics works backwards. You say in your head, here's how much I have to spend each month, and you divide that up into what matters. Right now, what matters for me is Major League Baseball. The service is terrible. Let me make that clear. But I want to watch Major League Baseball. You want to watch, how are you watching all this boring football?
Thanks for that, Tom.
To the center.
So I can tell you the European Championships, I believe, were on ABC and ESPN, right? You could get that on Hulu.
Plus, yeah.
Okay, that was on Hulu. Serie A next year, I understand, is going to be on Paramount Plus, which means I'm going to have to get another subscription service.
Yeah, I just don't buy
Paramount
it.
Plus.
I think they're, my personal take here is they're out of their minds. I'm going to go, John, back to Claudia Eller and what she's done at Variety, where she's doing the content creation, all the deal making, the making of the shows, all the sexy part of it. And the answer is they're coming out of the pandemic, and Variety is saying, let's go, let's go. But again, where's the profit?
Our director has just let me know that La Liga will be on ESPN. And then you've got the Premier League on NBC. So, Tom, take your pick. Got to pay up a lot to watch
Maria
some
Tadeo's
sport.
Directing the show?
Maria Tadeo is in my ear, Tom.
That's
directing
pretty cool.
the program.
She knows La Liga.
Coming up on the program, Thomas
That's
Costa.
Italy, or is that
Big Tech
Spain?
Wealth Management. That's Spain, Tom.
Okay, thank
Serie
you.
A
La Liga.
is Italy. Premier League's England.
Taylor's
you know
like, what
this.
are they talking about?
The S&P up 8. Taylor knows too. We advanced 0.2%. Bond yield higher by a basis point. 123.50 on 10s. We are about 24 hours away from an ECB news conference.
T-minus
This is Bloomberg.
24 and counting.
Live from New York City for our audience worldwide on TV and radio. Looking for more gains this morning in your equity market, 1 hour away from the opening bell. Equities with a little bit of a lift on the S&P 500. Futures are positive, advancing 9 points, up by around about 0.2%. Into the bond market, the main event, the main attraction. The first thing you probably look at every single morning on the Bloomberg screen, 124 on 10s.
I do not.
Yields higher by a basis point or two. What do you reach for then, Tom?
First thing I reach for is the baseball scores. I want to know what the Padres did.
I'm talking about the Bloomberg terminal, Tom.
I look in the Bloomberg terminal to see what the Padres did.
Okay. Get a lot of people writing in on any given morning. Thank you for doing that, for the contributions for our Bloomberg subscribers. This from Jim Bianco of Bianco Research.
I saw that, yeah.
Hello, Jim. Don't forget that Ted Lasso is on Apple TV. Season 2 drops on Friday. You're not alone, Tom.
No,
people
it's
very
great.
excited about this.
Eric Friedman of U.S. Bank said he's watching. I mean, John, it's great. Ted Lasso is it's like up. It's away from the gloom, and it's just guy Jason Sudeikis, whatever his name is.
Are they actually in Richmond?
No, you know where they film it? Crystal Palace, and they give a shout out to Crystal Palace early on. I believe it's filmed, John, at Crystal Palace. Where's that? South London?
That is south of the river, Tom. Yeah. That is south of the river.
Yeah, I believe they do it there.
I'm pleased you've got your
John,
geography down of London.
You got to get on this bandwagon. I mean, Taylor's watched
I'm going to. I will watch it this weekend just for you.
You will love it.
I've got Love Island on Hulu, haven't I?
Tyler, I don't know. John Tyler's a new attendee of Love Island.
I just love that you're up to speed on Love Island. I'm not even up to speed right now, Tom. I love that you are.
Yeah,
Who's Tyler? Tell us about Tyler.
Tyler's a constructive addition.
Do you want to go to Thomas Kosterg on Tyler from Love
I'll go
Island?
to Thomas Kosterg right now with Pick Day to save me as well. Jamila's in my ear. Boundaries, Tom, boundaries. Thomas Kosterg, Pick Day Wealth, joining us right now. And within his research, I'm going to ignore you. Within his research note is a really, really important observation on America's savings pile. He's optimistic we're going to spend a little bit of that savings pile over the next year to advance the American economy. But Thomas Kosterg, what happens in a couple years to that still massive savings pile?
Right. So the savings pile right now is around $2.5 trillion. And so the question for the economy is how much will be spent within the next year and within the next few years. Actually, I think, a small amount of that will be spent, but a small amount, which I think will be around 10 to 15% within the next year. But 10 to 15% of a big savings pile is still a big amount of consumer spending, which will be, flowing into the economy in the next few months. And that's why I'm quite cautiously optimistic about the U.S. consumer and therefore U.S. GDP in the coming month, even though we are going to see a deceleration in growth, that's for sure. But I think the U.S. consumer will stay quite resilient.
Do you believe that our savings pile, as you call it, has a permanent feature to it, that it's a permanent fixture of how we believe and think?
Well, I do think that, yes, indeed. I think some of that, part of the savings went into the equity market, went into long-term savings, and will probably not go back into the economy. But I think, part of it will be spent, point number one. And also, I do believe in credit card lending. I think credit card lending has also some upside potential in the coming weeks and months, and that will also support consumer spending. If we get, say, 50 to 100 billion more in credit card lending, that will be very helpful for growth. Because you're right, we have a lot of tailwinds are going to fade in the second half of the year, including the reopening, the fiscal support, so things like that. We also have some headwinds from the Delta variant. But I think the U.S. consumer will be able to be resilient.
Thomas, to what degree do you think Q4 is going to shape the outlook for the whole cycle? Not just the following year, the year after, but the whole cycle?
Right. So the thing with the U.S. cycle is that we're going back to potential growth, right? So we're going back to the trajectory before the pandemic. And that matters because that's usually a signal that we're mid-cycle. And we know that when we're mid-cycle, growth is getting harder to get. And the situation becomes more fragile, more difficult, more, without more risks. So it is true that 2022 could see more risks. However, again, I think, the U.S. consumer can propel growth. I also think we could have more lending in the economy, very accommodative financial conditions, despite the Fed's tapering. And so that could help sustain growth going forward, even though from a pure metric perspective, we're already mid-cycle and we have more risks.
So, Thomas, potential. What is potential? in the US economy? What is it now? Sub 2?
Yeah, I don't think potential growth has changed that much. I think it's still around 2%. The problem is, again, that we have weak demographics. Birth rate is especially a concern. I think we don't have enough babies in the US, but also I think in Europe as well. And that's definitely an impediment to growth. And with regards to innovation is there, and it's actually even more prevalent in the US than in Europe. But still, I think innovation is still failing to really broaden out and to spread through the economy. I think that's the problem. So productivity growth may pick up, but it won't be a massive pickup going forward.
Are you confident that peak inflation is also behind us?
Right. So regarding inflation, it's a bit complicated. Right now, we have the bottleneck inflation. So we have, scarcity of some products. But next year, we'll have the cyclical inflation, because usually inflation comes with a lag. So you have the recovering growth, and then 1 year later, you have the bounce in inflation. And so 2022 may still see inflation above 2% for cyclical reasons. The real question is about 2023. And then I think that the jury is out. I think some deflationary forces still apply, but I keep an open mind because, two forces that I'm watching are globalization, and especially the US-China tension, which could lead to potentially an erosion in globalization and more inflation in the US, and also the share of labor in the economy and whether wages go up more. But I think that's a topic for another day.
I know I'm simplifying this, so bear with me. You've had a few senators come out and saying that this inflation is effectively a tax. So you've taken away all of those wage gains that you described because of that inflation. How do you think about that?
Right. I don't think wages are a threat to inflation until we get to, say, around 5-ish or more on wage growth. And, we're not there. We're at 3.2 on the Atlanta Fed median wage growth number. So we're still well below levels that could be dangerous for inflation, in the sense that they will lead to a self-perpetuation of inflation above 2%. So, we're not in the danger zone in terms of wage growth. And actually, I think wage growth still has room to go up without threatening inflation.
How is that? How do you get wage or do you get back to a constructive and positive real wage, and it does not affect inflation?
Right. I think the correlation between wages and inflation is actually much more fragile and much more tenuous and slim than widely appreciated. I think the real danger comes above 5% on wage growth, and especially on the Atlanta Fed median wage. You have to look at median wages. Really, it's how someone staying in the labor force and staying in the same job, how his or her wage compares through time. I think that's the key indicator. And so to me, the key indicator is the Atlanta Fed median wage growth number. And again, we're at 3.2% right now, year on year, and it's still very quite soft. So I would not worry until we reach, say, 5%. We're not there yet.
And John, the run rate on the Atlantic Fed, I totally agree with Thomas on this, on the median aspect of wage growth. We got to get back to 3.6%. John Ferro, to really get there. We're not there yet.
Tom, I'm smiling because only economists call 5% wage growth dangerous. Will you find anyone else that calls 5% wage growth dangerous?
Agree.
Thomas, why is it? Just let's finish there. For a lot of people who might have accidentally tuned in this morning, trying to find something else, maybe some sports, I don't know, and stumbled across some economists talking about the labour market. What's dangerous about a 5% wage hike?
Right, because then it starts to affect inflation expectations, and you have also, wage gains starting to outpace productivity. So this is based, this reasoning that I have is also based on historical relationships. You have to go back, in time to see wage growth of above 5%, I think, in the early 1990s.
Yeah.
And then you had inflation sustainably above 2%. And it was a time when actually central banks were struggling to bring down inflation. I think right now the problem is that they're trying to move it up. And so I think those days of the early 1990s are probably gone, and they're unlikely to go back. But I might be wrong, but so far I don't see them
Thomas
in terms
Kostek
of wage growth.
Of Pictet Wealth Management, senior US economist. Thomas, good to catch up, sir.
Thank you.
Can you imagine managers everywhere, Tom? Year-end review. We can't give you the 5% you wanted because it's, quote, dangerous.
Well,
to offer you
I don't
anything
see
more than
that,
3.5.
but we're seeing action in our world, John. We're seeing it. I believe Deutsche Bank is out matching today some of the Young Turk pay packages.
100K seems to be the baseline now for first year out of school at some of these banks.
I think it's out of the pandemic, and it is a labor shift. Is it a change in labor share? I'm not there yet.
Larry Fink of BlackRock last week, Taylor, coming out with 8% across the board below director level. It's happening.
It is happening. It is power back to the people. You get this sense. It is sort of the negotiation, and we'll have to see how that continues, John. It's hard to see how that continues.
You can feel it, though, can't you, Taylor? The workforce
100%.
feels like it's got a bit of leverage, and I'm with you. You just wonder how long that lasts.
Yeah, that's a good question, John, and I don't know. You know, like Tom said, you're coming out of this pandemic. It could be this post-pandemic thing. How do you think about that going forward? I don't have the answer.
We've got to see how supply heals through the Q4, through the fourth quarter, the back end of this year, Tom. September is the month that people keep bringing up repeatedly.
John, I totally agree with your question to Mr. Costard there on Q4. We've barely touched on it. It's the end of July. You know, we're in this quarter. We're in that. I'm sorry, Q4 is a complete mystery.
And something as simple, Tom, as back to school. Back to school. Are we still on track for back to school?
In the last 24 hours, back to school has changed.
Let's see what happens. Tom Keene, Jonathan Ferro. Taylor, thank you.
T-minus 1 minute until you leave, right?
You with us again tomorrow, Taylor?
Friday. I will be with you Friday.
Friday. Who's tomorrow?
I can't.
Kaylee.
Kaylee's back tomorrow.
We just rotate.
What, do you draw straws at the end of the day? Is that what happens? All right, Taylor, see you Friday. Thank you. Coming up on the Open, Lisa Shallop, Morgan Stanley Wealth Management Chief Investment Officer.
Oh, that's good.
T-minus 19, TK. There you go.
T-minus 19.
From New York.
Thank you.
This is Bloomberg.
We have lifted.
With the First Word News, I'm Leanne Gerrans. The coronavirus has taken a dramatic toll on U.S. life expectancy. It dropped the most in more than 7 decades last year due to hundreds of thousands of early deaths. The pandemic's disproportionate toll on communities of color widened the existing gaps in life expectancy between white and black Americans. All of this information according to the CDC. Widespread flooding in central China has forced the evacuation of about 100,000 people from a city known as the world's biggest production base for iPhones. The city of Changzhou received 18 inches of rain from Monday afternoon through to Tuesday. That was equivalent to about 8 months of the city's average annual rainfall. Coca-Cola is bouncing back. The soda maker's second quarter sales did beat expectations, and it raised its revenue forecast for the year. That is evidence that consumers who were locked down a year ago are now returning to reopened restaurants, amusement parks, and stadiums. And Jamie Dimon is 65 years old, but it does not look like retirement is in the picture for the JP Morgan CEO. The billionaire was granted a special gift to persuade him to lead the biggest U.S. bank for another significant number of years. Dimon was awarded 1.5 million stock appreciation rights, which will let him capture a profit if the stock price does rise. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance from New York. Taylor Riggs and Tom Keene. Lisa Abramowitz is out today. John Farrell off to Excellence at 9 a.m. Please stay there for the market opening on television. I'll be on radio with a nice lift to the market, a recovery off a 2-day growth scare. This is a joy because he has done public service for America across so many areas, including ambassador to Japan and now senator from very much his, Tennessee. Bill Hagerty joins us, the Republican from Tennessee this morning. Senator Hagerty, I have to go to the stunning Washington Post analysis this morning of the unvaccinated. You are a leading spokesman on this. How are you going to convince the unvaccinated of your Tennessee to get it together and get vaccinated?
Well, I think we're off to an incredibly good start thanks to Operation Warp Speed. I don't think there's enough credit given to the progress that we made here at an unprecedented level here in America. In Tennessee, I've been very clear. I've taken the vaccine. My mother who is 89 years old, is taking the vaccine. I lead by example. We continue to encourage people to make it's a personal choice for folks, of course, but I've certainly been clear that I've looked at the data, and I think the right decision, certainly for me and my family, was to do just that.
How do you sell it? We talked to French Hill of Little Rock the other day with the same challenges. I would suggest Arkansas, frankly, a grimmer story than any Tennessee. But what's the prescription you have with your knowledge of Nashville media and Tennessee business? What's the prescription? What's the plan to jumpstart this as we hear from President Biden?
I think as we look at where we're headed right now, the numbers continue to look much better in terms of fatality. And we just need to continue to talk about that positive outcome, that positive result, and encourage people to continue to get behind it. As school reopens, things get back into the swing of things, we'll probably see another pickup in inoculations.
One final question on this, Senator, because I know Taylor Riggs has some important questions as well. Senator Hagerty, what do you need from former President Trump to send a message to the unvaccinated?
President Trump is having a hard time sending any messages thanks to the censorship of big tech. His normal means of communication has been incredibly stifled. I think that's incredibly troubling. In terms of his message to people, no one worked harder than President Trump to put a vaccine in place. I think people know that. I think he can convey that. But he put a tremendous amount of work in place with Operation Warp Speed to make this vaccine possible, not only for America, but for the rest of the world. I think that's an incredible example. He should talk about that when he can.
Senator, pivot with me, if you will, please, to infrastructure. What is the path to a bipartisan $579 billion infrastructure deal?
Very hard to say. Chuck Schumer today is planning to put a procedural vote in place to start the process on this. Yet we haven't seen any text. We don't know the content of it. I haven't seen anything. This sounds remarkably similar to something that we've all seen before. You remember you have to pass the bill before you can see what's in it? Obamacare 2.0, that didn't work out well for America. So we have a lot to see and a lot more work that needs to be done before I can comment on exactly what's in the bill and how we should proceed on it.
Is this two-path approach still the right way to go?
Well, it's certainly not the path that I would take. I'm a businessman my entire career. I step back and look at this and say, what's happening here? You've got a two-path process, one that a lot of effort has gone into play. I think I respect my colleagues who have worked hard to put a bipartisan plan in place. But as you know, when you negotiate a deal, often what's even more important is what you negotiate out of a deal. Yet we've got the Biden administration, we've got Nancy Pelosi and Chuck Schumer talking about pushing everything that was negotiated out of the deal right alongside. In fact, Nancy Pelosi has said that she's not going to even look at the bipartisan deal unless the completely partisan reconciliation package is put forward too. I wouldn't call it a reconciliation package. It's just another reckless tax and spending program that they're trying to shove through, a massive program, something that we've never seen before. And I think it's going to have devastating effects on the economy. So I'm very concerned about enabling this partisan package to go through under the guise of a partisan, infrastructure package that's far smaller.
Senator Hagerty, I am fascinated what your prescription is for your Republican Party. So many of the interviews we have with Republicans and with Democrats is a liberal tranche of the Democratic Party really troubling for moderate Democrats. Do the Republicans respond to that by being more staunchly conservative or by moving to a Lamar Alexander-like middle?
I think what we need to do is continue to convey what's actually happening here. We need more business people like me in Washington. I think that's the point. We have a hard time conveying the essence of what's occurring here. But right now, what we're doing is we've already seen a $1.9 trillion package move through on a wholly partisan basis back in March of this year. That's roughly 10% of our GDP. They're talking now about dumping 20-25% more of our GDP into this so-called infrastructure package. It's going to be massively inflationary. We need to convey that. When we hear moderate Democrats like Joe Manchin say He doesn't want to put something through that isn't paid for. He doesn't want to increase the debt. These are things that we need to push back on and say, well, if it's going to pay for itself, you've got to look at how they're talking about paying for it. And if they're talking about crushing taxes on job creators, if they're talking about killing capital formation by putting capital gains taxes in place, those types of policies are going to be devastating to our economy.
Right.
The American public is smart enough to understand this. We need more business people talking about this in a way that's rational and easy to understand.
Senator Hagerty, I wasn't going to bring this up, but you mentioned private business in Washington. I need you to comment this morning on the jailing of the private equity gentleman from Los Angeles, Tom Barrack. What were your thoughts when you heard of these actions by Justice?
Well, I've only seen a headline or two, so I don't know, anything about the specifics of the content of this case or what it has to do with private equity.
Well, it doesn't have to do with private equity, but certainly it is of note here as well. Senator Hagerty, thank you so much for joining us today. Bill Hagerty, he is of Tennessee. Greatly appreciate that this morning. Taylor, we've interviewed Tom Barrack any number of times, and across all of, what we've done on surveillance, and certainly the shock of seeing him jailed this morning is tangible off of allegations in the United Arab Emirates. And we'll just have to see how that works out.
And we had that news yesterday in the close. Eric Schatzker running to the phone to try to help make some sense of this, provide some analysis for us. Tom, if you'll bear with me, I wanted to go back to a comment that the senator mentioned. I mean, you have Mitch McConnell coming out and saying that higher inflation has wiped out all of the wage gains. It's a tax on the consumer. I know with your focus on economics, I'm simplifying that, but you have the senator, the businessman, hinting about some of these inflationary pressures. That means that their constituents are talking about it as well. And I do wonder what some of their constituents are saying when they are starting to feel some of these pressures as well.
I don't have the chart in front of me, but the real wage, the inflation-adjusted wage dynamics of the nation, Taylor, right now are just simply grim. There's no other way. There's no other way to describe that. That'll be one of our themes here into our Federal Reserve coverage. I'm rumored, I'm told, I'm advised by my people that there'll be a Fed meeting next week. I was like, oh, really? I was really on top. I was still in space.
You have people?
Yeah, I have
need people.
I have people.
I
They
need to be
were
advised by
helping me
people.
come down from space with Jeff Bezos and his team yesterday to the real world of futures up 9, Dow futures up 144. It's a market in recovery off 2 days of a growth scares. Please stay with us through the day on Bloomberg Radio and Bloomberg Television. Good morning.